सर नमस्ते।
हाँ नमस्ते नमस्ते। चलो तो काफी लोगों हाँ नमस्ते नमस्ते। शुरू कर दे सेशन फिर। अभी मेरे ख्याल से 1 मिनट बाकी है। ओके तो अच्छा हरी, hello, who is there? Hari is there. Who is there from IBS? IBS Institute of Hari. Okay, shall we begin, or Mohanan sir would like to say something?
Sir,
Yeah.
okay.
Sir,
Yeah.
Kulkarni sir, good evening.
Good evening, sir. Good evening. Yes, Yadav sahab, boliye.
Sir.
Sir.
As of now, we are around 61 members joined on this platform, sir.
Yeah, I think by the time we talk about what happened yesterday and how our journey of learning has gone, by the time people would like to join. But let me once again take a very quick review on what are all the things yesterday did we covered. Okay. Yeah.
Can I first welcome all the
I'll also welcome you. Also welcome on behalf of association, because that is what organization's initiative, and we must make a point of it. That you do, sir, please.
Sir, good evening every participants who have joined. A very warm welcome to this beautiful education enriching session. I am also en route to my house, yet that's why I am not able to give my video online. A very warm welcome to all. A very warm welcome on behalf of our Union Bank Officer Association, Delhi. I, Shyam Sundar Yadav, Deputy General Secretary, Union Bank Officer Association, Delhi, has been nominated as coordinator for this program. I thank my parent unit, Union Bank Officer Association, Delhi. And just to inform that yesterday also there was a session of 2 hours, but it on the heavy demand of our members, it was extended for about around 1 more hours, and it was a very energetic session given by our Kulkarni sir. On behalf of Union Bank Observation, I welcome Sri Satish sir, Director of IBPS, IBS, and Sri Mohan sir, Academic Director of IBS, and very energetic faculty, Sri Kulkarni sir, very energetic. You will realize today, if you are, those who have not joined yesterday and who are joining today will realize that how energetic it is. On behalf of my president, Sri Anil Sharma sir, and my working president, Sri Rajiv Bogi sir, my general secretary, Sri Brij Bhushan sir, and all UBO team Delhi, I warmly welcome all the faculties and academic directors of IBS and all the members, officers, and all who have joined this platform. A very warm welcome. Let me give you a brief history of the IBOC. We are Union Bank of Delhi, and we have taken a very small initiative for the educational welfare and education enhancement, enrichment of all our members, so that it can be very fruitful for you in the forthcoming examinations and journey ahead. We, Union Bank of Association Delhi, are affiliated to our dynamic All India Union Bank Officers Federation under the dynamic leadership of our General Secretary Sri Balachandran sir, President Sri Girdhar Gopal sir, Chairman Sri Satyanarayan sir, and the youth leader Sri Srinath sir. And in overall, we as AIUBF are affiliated to our apex body AIBOC IBOC, which is the majority union which is serving the officers community in every sphere. Every sphere, we are more than 350,000 officers pan India. Apart from Union Bank of India, I mean, including in Union Bank of India, various banks are members in that IBOC facility. So we are the leaders in the banking sector to provide all sort of support and protection to our officers, especially in the supervisory cadre. So I thank our all IBOC General Secretary, Sri Soumya Datta sir, and President Sri Murli sir, for giving us full moral support, full valuable support to our Union Bank of Association Delhi unit and assisted in providing all these platforms. We are very much thankful to our AIUBF leaders and our IBOC leaders. Thank you so much, sir. Without wasting much of our time, I will request our faculty, Sri Kulkarni sir, also to resume the session after welcoming all our members. Thank you. A
Thank you.
warm welcome.
Thank you, sir. Thank you, sir.
Thank you.
Have
Thank
a
you
very
so much.
happy journey.
Thank you so much, Yadav sir. Thank you so much, IBOC. Because I don't know whether at the end of the session I would be in a position to say thanks or not, because I don't know at what time we'd be ending the session. But anyway, I'll try managing entire session within a span of 2 hours or maximum by 15 minutes delay. And okay, at the outset, I thank you, the organization, and I really compliment the organization's initiative. And I also make my thanks mention specifically to Institute of Banking Studies. I am associated with the Institute of Banking Studies for the last 6-7 years. Okay, post-retirement, I am associated with the institute, which is always taking a great leap towards making bankers enabled to enrich their knowledge, enhance their knowledge, enhance their ability to perform better way, and they can succeed in JAIIB, CIB, and various certificate examinations. And I'm a faculty for that purpose with IBS for almost all the programs, including the debt recovery agents program also. Okay, without spending much time on this such a brief, let me begin. Yesterday, during our 2-hour session, what we have covered, almost around 8 different topics we had covered. Out of them, the very number one topic was Indian financial system. And out of the Indian financial system, there were 3 critical important points. What is the scheduled bank? What is a non-scheduled bank? What are all the differentiated banks? And what are all the difference between payment bank and small finance bank? And then systemically important banks, then financial system, various regulators. Then we had moved our talk to RBI functions, and in the RBI functions, very, very critical and important functions such as branch licensing, annual credit policy or annual credit policy, monetary policy committee, policy rates, policy reserves, credit information companies, factoring, forfeiting, asset classification, that is investment classification, and what is that HTM, what is AFS, what is fair value to profit and loss account, all those aspects we discussed. Thereafter, we have moved to understand what are all the important legal provisions which are there under Banking Regulation Act, because to manage the banking industry, there are 2 important enactments. One is the Banking Regulation Act, another one is the Reserve Bank of India Act. And in Banking Regulation Act, we have discussed almost 10 to 12 different sections. Out of them, very, very important are Section 19(2), talking about holding a shares of another company. Section 22 about licensing. Section 24 about SLR requirement. Section 26 about the unclaimed deposit. Then Section 35 giving powers to RBI to inspect the bank. 35A directions to the bank. Then 45 suspending the management and applying to the central government. Section 45Y preservation of record. 45Z return of unpaid instruments to company, and then 45ZA to ZF nomination. About that today we will discuss. Okay, and the important provisions in RBI Act with regard to Section 22 we have discussed, Section 28 we have discussed, 28 about note refund rules, 22 about issue of bank notes, and 31 about prohibiting anybody other than the government of India and the RBI to issue bearer promissory note and bearer bill of exchange. 42I is about CRR to be maintained by the scheduled commercial banks. And let me make a point yesterday which we could not discuss, including the unscheduled bank also are required to maintain CRR, but not with the Reserve Bank of India. With that regard, we have discussed there is no minimum, there is no maximum, there is no ceiling, no floor, and then there is a penalty if the bank don't maintain. And then what are all the constituents of the CRR, those part we have discussed. And also 45ZB about constitution of the Monetary Policy Committee. Then money market, a few terms including CDCP we had discussed. Okay, and then which are all the various terms such as call money, notice money, term money. Then what are all the criteria for being participant in the money market for the banks, retail direct scheme of Reserve Bank of India, masala bonds, treasury bills, then KYC AML. Almost 12 important points we have discussed. Okay, 12 important points of KYC, 13 including CKYCR. Then there are different type of customers we had discussed, and followed by different type of customers. We had tried to cover almost all category of customers which are critically important with regard to understanding for examination. And then we had moved to banker customer relationship. And I think after that, in the banker customer relationship, bankers' rights, right of set off, right of lien, right of appropriation, followed by the garnish order. Then I think integrated banking ombudsman scheme we had discussed, and the Consumer Protection Act. And this Consumer Protection Act, let's once again try remembering, because recently there is a change in the Consumer Protection Act. Recently there is a change in the RBI integrated ombudsman scheme, and therefore both the things are important for examination. The RBI integrated ombudsman scheme introduced only in 2021, though the award limit is 20 lakhs, and the mental agony and the harassment and the expenditure incurred by the complainant, for all that purpose maximum 1 lakh, that's the award. Only one important thing is the appeal is required to be made to the executive director of Reserve Bank of India, not the governor. And as usual, remaining all the terms remain same, except now a centralized ombudsman, only one ombudsman. Any complaint, whether it is relating to NBFC or whether it is relating to bank complaints or whether regards to payment system, all the complaint will be centralized, and central level they will be segregated to respective banking ombudsman. Means within that banking ombudsman there is a deputy ombudsman and the banking ombudsman. That is the setup they have made. And banking ombudsman is recruited, appointed for a period of 3 years. Okay. Then next is a banking ombudsman is a very senior level person, that is general manager, chief general manager, or upper rank in the Reserve Bank of India. Okay, so these are few important aspects I thought I'll share with you. With regard to COPRA, there are two important things, that is Consumer Protection Act. Now, earlier there was no authority who was looking after or managing the consumer grievance redressal related issues at a centralized level. Now there is a central consumer authority. Okay, now CCPA is there. Okay, Central Consumer Protection Authority is there, and CCPA is a Director General, that is authority person. Now he can suo moto take action against any company. He can direct the company to stop the production. Okay, suspend the activities. That power enjoying authority is there. And the monetary limits for the District Consumer Forum, the State Consumer Commission, and the Central National Consumer Grievance Redressal Commission. At all the levels, the monetary ceilings are increased. As per the law, it was increased to 1 crore at the district level, means up to 1 crore, 1 to 10 crore, 10 crore and above. But recently, in the December 2021, there is a change made. Now District Consumer Forum entertains only cases up to 50 lakhs. District Consumer Commission entertains cases only up to 50 lakhs, and more than 50 lakhs up to 2 crore, they are being entertained at the State Consumer Redressal Commission, and more than 2 crores, any amount, that will be entertained at the National Consumer Redressal Commission. Okay, please make a note of it. Okay, very recently there is a change, and that change is exam point of view very important. Number two, this is not only monetary jurisdiction the State Commission and the National Commission enjoy, but they are also the appellate commission. For example, if a person is not satisfied with the District Consumer Commission's judgment, then the appeal can be made to state. And in case a person is disappointed with the State Commission's the judgment, then he can make appeal to the National Commission. And in case somebody is not happy there, also he can go to Supreme Court. Okay, and the people who are appointed are the legal people, that is a district judge, high court judge, and the high court judge. So that is the capability people, they are heading the commissions. And as far as other members concerned, eminent members there could be. And now online also complaint can be made, even grievance can be heard online. Then next, the brand ambassadors are there, product canvassing ambassadors are there, who canvass various kind of products. Even under the new Consumer Protection Act, they are also liable for punishment. So that's all about the yesterday's session. Now, with regard to today, I had planned originally, we will also talk about few general guidelines with regard to deposit. But keeping in view the paucity of time, I wish that all these things, because you know about the deposit, such as TDS. TDS is compulsory with regard to term deposits, where the interest earned by the person is more than 40,000 or more than 50,000. More than 40,000, more than 50,000. 40,000 for general, 50,000 for the senior citizens. And this TDS return is required to be made by the, submitted by the every bank branch to the appropriate authority by latest by 5th of the succeeding month. 5th of the succeeding month. And then in case there is a default exam question, please listen carefully. In case there is a delay in filing the return by a bank branch, then there is a likely penalty, and penalty is rupees 200 per day. Okay, please make a note of it. Exam question, it recently came in the Punjab National Bank's examination. Then second is a DICGC coverage. All of you know that deposits up to 5 lakh per customer per bank are covered, and for that purpose there is a premium point 12, that is 12 paisa per 100 rupees premium is paid. Premium is borne by the bank. Premium is borne by the bank. Inoperative deposit, yesterday only we discussed, there is no need to talk about that. Now another important area, that is about the nomination. Nomination is a facility provided to bank as well as customers under section 45ZA to 45ZF. Okay, ZA, ZB, ZC, ZD, ZE, ZF. Okay, ZA is giving this facility for the deposit accounts, and ZC is giving this facility to safe custody, and ZE is giving this facility to for the safe deposit vault. Okay. With regard to nomination, there are three important things you need to make a note. The nomination facility is available only with regard to deposits maintained in the name of a individual or joint individual only. The deposits which are made in the name of a partnership firm or association of people, this facility is not available. However, there is a facility can be made available to only proprietor's account. As proprietor and proprietary firm, there is no difference. Number two, with regard to joint deposit also, there is only one nominee can be made. There are no provisions for making two nominees with regard to deposit account. Number three, nominee also should be invariably only one with regard to whether it is a joint deposit, whether it is a single deposit. There could be more than one nominee only when there is a locker facility maintained in the joint names, operated jointly. If the locker also operated either or survivor, then only one nominee. And if the safe custody is in the joint names, then there is no nomination facility. Okay, so these are few important things. You please make a note. In case there is a claim made by the legal heirs against the nominee's claim, then also bank cannot stop the making payment to nominee. Bank can advise the legal heir to approach a court and get a restraining order or stopping order from court. Then only the bank can stop. Otherwise, bank has to make the payment to the nominee in case nominee is claiming the money. I hope this is clear. Whether there is a nomination available, whether there is no nomination available, in spite of the fact the bank has got maximum 15 days time to settle the claim. When nomination is available, actually 15 days is not required. The matter can be settled just within 2 days, because when nomination is available, the process is very, very simple. Now, after understanding these things with regard to deposits, I wish that you must go through these deposits which are maintained by bank on behalf of Government of India, and those are Sukanya Samriddhi Yojana. Okay, I'm making a point. Okay, Sukanya Samriddhi Yojana is one deposit scheme which we are maintaining on behalf of government, and I wish that you must go through the important features, not all the features. Then similarly, public provident fund account. Okay, then senior citizens deposit scheme, capital gains account. Please make a note in all these schemes, 2, 2, 3 important points you identify. How out of the 4 schemes, one definitely to appear in examination. Since I want my time to be spent on advances, I am not touching these points now. Okay. And now there is also always a question with regard to what is the commission bank gets when bank is entertaining the government business. Okay. And for that government business, bank gets the commission when receipts are there for every physical receipt which is received, 40 rupees, and electronic receipts 9 rupees, and for pension payment rupees 75. Okay, this is what we get agency commission. And other than the pension, any amount on behalf of government we turn over, then 6 rupee 50 paisa per 100 turnover we are entitled for. In addition to this, there are schemes such as on behalf of government for the purpose of social welfare are being allowed, and all of those out of them, small accounts yesterday we already discussed, and there is a next scheme is Pradhan Mantri Jan Dhan Yojana, and that scheme we also name it as basic savings bank deposit account. Okay, and there are features, not many features are there with regard to BSBDA. There is one feature called overdraft facility, and overdraft facility up to rupees 10,000. Is it a blanket 10,000 or the amount is calculated on the basis of turnover in the account? Examination question. Are you getting me? It is not blanket 10,000, that it is calculated. The eligibility of overdraft is getting calculated on the basis of turnover during the last 6 months in the account. Based on that only the customer eligibility is arrived at. Okay, then I think these are all the important things with regard to deposit and the other deposits which are maintained on behalf of government. Now I am talking a very important area, and that too again there is a recent change with regard to number of free transactions. All of you are aware that now Reserve Bank of India has made very clear financial, non-financial, not more than 5 transactions in 1 month. Okay, 5 transactions in 1 month in a metro station are permitted, isn't it? Am I right? Or you have some other figure from Union Bank of India? Hello.
It is 3.
It is 3 or 5. Check up once again.
It is 3 and 4 other 5.
3 in metro.
3 in metro, 5 in other.
Financial,
Yes.
non-financial, non-financial put together 5 or 3. Recent change. Okay, you check up once again and correct yourself. In case there is 3, answer 3. In case there is a 5, please answer 5. Okay, yeah.
5 is there.
And number 2, in case there is anybody who is making more than 5 transactions, then there is a additional fees. Earlier it was 20 rupees, now 21 rupees plus. For every additional transaction made, there is a charge of rupee 21 plus the GST. Okay, this is what. And in case there is a failed transaction, ATM transaction failed, bank gets how many days time? A maximum, how many days? 5 banking days, 5 working days, 5 calendar days.
5 working days.
5 calendar days.
5
5 calendar days. And in case bank fails to refund within those 5 calendar days, then bank is required to compensate the customer every day 100 rupee. Okay, and similarly there are digital transactions which are being undertaken by, for example, there is NEFT made and that NEFT transaction could not get credited in the beneficiary's account. Then within how much time the transaction need to be reversed? That batch time,
2 calendar days.
after completion of batch time within 2 hours.
Within 2 hours.
After completion of batch time within 2 hours. Is it clear? And then in case there is any transaction with regard to the IMPS or other digital payments or any other way, the transaction got stuck and customer could not get, then you have got 10 days time. Okay, but please understand that is a maximum upper limit provided. Bank don't require that much time. Similarly, with regard to locker, there is a changed guideline, and that is a recent thing that again bank can take even the deposit. Earlier also it was there that 3 years rent plus locker break open charges can be obtained from the customer in the form of deposit. Now a change what has made is compulsorily bank need to maintain a register of locker requests, and the wait list must be notified to the customer, and that based on the wait list only locker should be allotted. And if at all the bank is maintaining locker, then as usual the nomination is a facility. And in the recently issued guidelines of Reserve Bank of India, there is a mention that a nominee's photograph can also be obtained provided your depositor is ready to give. Okay, it is not compulsory if the depositor is ready to give. Again, let me make one more point here, whether nomination is a mandatory facility or that optional facility.
Mandatory.
Nomination is a mandatory facility. In case customer is not willing to give nomination, he has to give a letter to the bank that he is not willing to give the nomination in his account. Is it clear? And in case there is a robbery, theft, which are beyond the controls of bank, and these kind of things, when there is a loss happens to the locker holder, that locker is break open and somebody has theft, then there is a compensation provision has been made, and the compensation is 100 times of the rent of the locker. Okay, is it clear? And in case there is a loss due to flood or any other natural calamity, there is nothing. Okay, no doubt, for that sake bank obtains, even including theft and robbery also, there is a insurance obtained irrespective of whatever quantity is there. Then next, very important is online recurring credit card transaction. Regarding, there is a guideline which got implemented from 1st up to 30th September. People required to make a notification, and that now every credit card transaction need to get an independent authentication unless and until it is properly got authenticated by the credit card holder. The earlier like that, every once credit card details are given, people used to carry out the transaction. Okay, now it may not be possible. Then another important area which I just wanted to emphasize on, prepaid payment instruments can be issued even to a non-KYC process. Means non-customers also can come to the bank and request for prepaid payment instruments, including your gift card, including your travel card. And for that purpose, the transaction limit fixed by the Reserve Bank of India is not more than 10,000 rupees in a transaction, and not more than 1 lakh in one financial year for non-KYC complied customers. And for KYC complied customers, there is no limit. Okay, is it done? Shall I move further? I don't want to spend this time because these are all things are very well known to you all. Okay, it is just a revision. Now let me move to the Negotiable Instrument Act. And this Negotiable Instrument Act deals with the 3 important negotiable instruments. And which are all these negotiable instruments is discussed in section 13 of the Negotiable Instrument Act. Section 13 of the Negotiable Instrument Act says the check, promissory note, bill of exchange, and the check are the negotiable instruments. Then in addition to these 3, there are many other negotiable instruments such as draft is a negotiable instrument, demand draft is a negotiable instrument, certificate of deposit is a negotiable instrument, commercial paper is a negotiable instrument. Okay, treasury bill is a negotiable instrument. So there are many negotiable instruments. And the warehouse receipt like documents which are document of title to goods are called as quasi negotiable instruments. Okay, then I want to talk about the section 10. Section 10 is about payment in due course, and this payment in due course is nothing but a bank is supposed to make the payment of a instrument, not okay, as per the apparent tenor of the instrument, or anybody for that matter who is supposed to make the payment, he has to look as per the apparent tenor of the instrument, and based on that, without negligence, in good faith, he has to make the payment, provided there is no doubt in his mind that the person who is presenting the instrument is not the true owner. Okay, and with this regard, let us try understanding now which are all the things which are apparently visible. Date is one thing. Now, a check which is more than 3 months old is a stale check. Now, under which of the guidelines, under which act the provisions of this validity of checks are stated? Question comes in exam. So please make a note. These things are not stated in Negotiable Instrument Act. Validity of check is decided, that is 3 months, not beyond 3 months, is as per the Reserve Bank of India guidelines under section 35A. Prior to these guidelines, bankers were deciding it 6 months, and that time there was no guideline, nothing. It was a banker's internal decision. Okay, so validity of a check is as per section 35A of Banking Regulation Act, okay, or as per the Reserve Bank of India guidelines. This is what is your answer, not Negotiable Instrument Act, not any other act. Okay, under section 35A of Banking Regulation Act, Reserve Bank of India derived power and give the direction. There is a recently new change came with regard to checks, that is a positive pay system, and all of you know that positive pay system is mandatory for which amount?
50,000
5 lakh and above.
50,000 to 5 lakh.
Okay.
5 lakh and
Now,
above.
I understood. Please
It's
make a
not-
note. Please
not
make a
mandatory.
note. Mandatory for 5 lakhs and above. Okay, mandatory for 5 lakhs and above. However, in a phased manner, it has to be brought down to 50,000. Now, I think Union Bank of India already made the provisions for 2 lakhs and above. Okay, and by within short period of time, once the bankers are ready to implement this positive pay system up for an amount of 50,000 and above, it will be made compulsory for all the people who are issuing check more than 50,000 to intimate in advance that they have issued check. It is again in the interest of the customer only. There is nothing like that. The bank has got some interest in that. Okay, and there is a third important thing with regard to the check is hello. Okay, and there is a third important thing which I just wanted to emphasize is that hello, did I lost? Hello. Yes.
Sir, you are audible, sir.
You are audible, sir.
No, sir. Okay.
Yeah, समझ नहीं आ रहा मेरे को.
No,
Is
you
it
are
clear?
audible, sir.
Audible na?
Audible.
Okay.
Audible, sir.
Silent
Everything is
रखिए.
okay.
Silent रखिए. Okay, silent रखिए. Okay. What I was telling you that the drawer's mandate is a very critical mandate. In case there is a signature of the drawer is forged, then bank is liable, whether that forgery is visible with the naked eye or not visible. Is it clear? The next section 14 is talking about the negotiation, because that is what a critical factor in the negotiable instrument. The negotiability is nothing but transferring the amount of property which is mentioned in the instrument to someone in a very easy manner. And that easy manners are two. One is handing over the instrument. Second is signing on the backside of the check and handing over the instrument. And when somebody signs on the backside of the instrument, then it is known as endorsement. Now, with regard to endorsement, there are different type of endorsements: blank endorsement, full endorsement, conditional endorsement, partial endorsement. But exam point of view, there are two important endorsements. One is a facultative endorsement. Another one is a sans recourse endorsement. Very, very important. What is facultative endorsement? Facultative endorsement is such an endorsement by which the endorser is making an open declaration that in case this instrument gets dishonored, he need not be served a notice of dishonorment. Though there is a provision that he is entitled for a notice, he waives that notice. That is what facultative endorsement. And sans recourse endorsement is such an endorsement which is exactly opposite to facultative, wherein the person who is endorsing, he is making himself free from liabilities on the instrument, and he says, other than me, let all the people who are on the instrument may be made liable. That is a sans recourse. No recourse against me. These are the two important endorsements. Make a note of it. Section 18 is about the amount in words and figure differs. And exam point of view, let me make one clarification to you here. While reading the question, please read very carefully. In case in the question, if the answer is expected of you as per provisions of Negotiable Instrument Act, then your answer should be, you should make the payment what is stated in the words. But if there is nothing like that and it is asking you the question, in such case what bank should do, then your answer should be return the check, because amount in words and figure differs. There is a clear-cut reason is mentioned in the return memo, and with that you can return the check, because in banking law is important, but practice is also equally important. Section 20 is telling about inchoate instrument. Inchoate is nothing but incomplete instrument. The person who is holder is entitled to fill up the instrument in case he is receiving unfilled or incompletely filled. That is section 20. Section 22 is about the days of grace. Very, very, very important section. Scale 1 to 2 people definitely are likely to get question on that. Computation of due date of a bill. And computation of due date of a bill, you simply remember like this. Read the question carefully. In case there is a usance period, you have to add 3 days of grace. Means date January 1, 2021 bill due after 2 months. Due after 2 months means it is due on January 1st March 2022. 1st March 2022, if it is due, you have to add 3 days grace and make it payable. That is on the 4th of March. So this is what about the bill if it is due 2 months after the date. But 2 months after the acceptance, if it is there, or 2 months after site is mentioned, then you have to see in which date the bill got accepted. From that date, you have to calculate the period, add the days of grace. And days of grace are compulsorily to be added unless and until it is clearly stated that days of grace are not at all to be added. So this is what about computation of due date. Exam question 1 to 2 may likely come. Then the stop payment instruction, all of you know that customer can issue the stop payment instructions on his check. And if he gives the stop payment instruction, he only has got authority to revoke the stop payment. With regard to individual, there is no problem, but there are joint accounts, there are partnership accounts, there are companies account, and there are associations account. So in such cases, though there is a stop payment is given by one party, revocation is required to be given by all the authorized signatories. That is one of the critical factor to be make a note. Then protection to paying bank is available under which section? Section 10, section 85, section 85(1), section 85(2), and section 85A, 89. Means 10, 85, 89. These are three important sections with regard to protection to paying bank. Section 10 we have already discussed. Section 85 says that if an instrument is payable by order of the instrument is payable to payee or order, then it can be negotiated by endorsement and delivery. And in that case, bank is supposed to make the payment according to payment in due course, and the regularity of endorsement is only to be checked. Okay, with regard to 85(1) is talking about the order instruments, and 85(2) is talking about the bearer instruments. And with regard to bearer instrument, no need to check any endorsement. Even if they are appearing, bank will ignore those endorsements. That is, and section 85A is talking about the demand draft. Section 89 is telling that in case there is a any corrections are made on the instrument, that is material alteration, so bank gets protected in case there is a material alteration made, though it is not being visible clearly. In such case, for obliterated instrument, bank gets protected. So that is what is the section 89. Then section 99 and section 100 is about noting and protesting. That is with regard to bills. And any bill which is dishonored, it required to be noted with notary public. That is 99. And after noting, the notary public will give a certificate. That is section 100. Protest is nothing but a certificate. And based on that only, he can file a case against all the parties to negotiable instrument. Section 124 to 128 are talking about the crossing. You know that crossing can be a general crossing, crossing can be a special crossing. Now, with regard to general crossing, merely two transverse parallel lines appearing on the face constitutes crossing, and crossing is an instruction given to which bank? Crossing is an instruction given to paying bank. What is that instruction? Make the payment of this check only to the bank, only to the bank. Okay, and the account pay crossing is an instruction to collecting bank. Account pay crossing is an instruction to collecting bank that collect this instrument only in the account of payee's name. And account pay instructions are from which law, which act? Please make a note. Negotiable Instrument Act don't say anything about specially about account pay crossing. Again, account pay crossing guidelines are from Reserve Bank of India as well as income tax authorities. Okay, So this is what I just thought I'll talk to you about the crossing. And last provisions of Negotiable Instrument Act are section 138 to 148, and 138 to 148 deal with the dishonorment of a check. In case the check is got dishonored, then the payee or the endorsee is entitled to claim the money from the drawer, provided drawer has issued this check, the check for clearing a debt, the check got presented within the validity period of the instrument. Third, check got dishonored for want of money availability in the account. If these three conditions are met, then the payee can file a case against the drawer, and that case, once the case is filed, then automatically the law is, these provisions make the civil law a criminal law, and the person who has issued check may be made liable for double the amount of check or 2 years imprisonment. And section 143 got inserted now, and that insertion makes one thing clear, that now even there is a summary trial can be made, and the court may ask the drawer of the check to make payment of 20% of the check amount in advance, even before the case gets settled. And in case the case gets settled in against him, then he has to pay remaining 80%. And in case if case gets settled in his favor, that is a drawer's favor, then the payee is required to return back the money which is he has received, that 20%. These are the provisions with regard to negotiable instrument. Okay, now I think with this we are almost coming to an end of the general banking areas. And now another very critical area we are talking, that is a Basel. Okay, and what is this Basel committee? At present the Basel III is in run, and Basel II and Basel III, please make a note, there is not big difference. All the three pillars remains constant. Means how many pillars are there under Basel III? Please make a note, there are only three pillars. How many pillars under Basel II? There are three pillars. Which three pillars? Pillars remain same: minimum capital requirement, supervisory review process, and the disclosure. Pillars remain same. Then what is the change made in the Basel III? In the Basel III, the change made is the capital quality got improved. Okay, quality of the capital got improved. Then second thing, there are 2-3 important factors got added in the Basel III, and those are regarding leverage ratios. Okay, liquidity coverage ratio, counter cyclical buffer, capital conservation buffer. These are all few factors added. Net stable funding ratio. These are the few factors got added in Basel III based on the experience which has received during the recent financial crisis in 2008. Okay, that only prompted to introduce the Basel III. Okay, and let's try understanding about the Basel committee and the capital fund with regard to these things in bit detailed way. Number one pillar, as far as Basel, as far as roadmap of Basel implementation is like this. First of all, Basel I guidelines came in July 1988, and in India they got started implementing from 1992 onwards. After the Narsimham committee recommendations came, they considered these guidelines, and the capital adequacy concept got implemented in our country. Asset classification, income recognition, all those parts were included in Narsimham committee first set of recommendation. Then the Basel II introduced in June 2004, and there are few questions in exam. Basel means what? Basel is a place in Switzerland. Why the Basel? Basel is a place where banks for international settlement is there. Okay, and that bank for international settlement takes care of the regulating the regulators of across the globe. Okay, it is nothing but all regulators conglomeration of bank, that is a banks for international settlement. And BCBS is a Basel Committee on Banking Supervision, that gives the recommendation. Therefore, these recommendations are known as Basel Committee recommendations. Okay, so Basel II came into June 2004, and then implemented in our country right from 2009 onwards. Basel III guidelines, they came in 2010, and even now also they are under implementation because their capital related guidelines, capital quality related guidelines, liquidity related guidelines are now got implemented in our country. So these are all the features of the Basel, that roadmap. Basel II has got 3 pillars, and same 3 pillars continued in the Basel III also. Pillar 1, minimum capital requirement. This minimum capital requirement is computed for 3 important risk bank undertakes: credit risk, market risk, and operational risk. Okay. Pillar 2 is another important pillar, which is giving the Reserve Bank of India a power to look into the banking industry, assess whether the capital adequacy what bankers are calculating is being properly calculated, and whether risks are properly being computed. And for that purpose, Reserve Bank of India started risk-based supervision, and in all the banks, risk-based internal audit, and based on that risk-based supervision. And Reserve Bank of India makes supervision on 2 counts. One is on-site surveillance, one is off-site surveillance, and another is on-site inspection. Section 35 gives power to RBI to inspect. Inspection is carried out, physically checked. Off-site, based on the data which is submitted by the bank, Reserve Bank of India looks into the capability and the functioning of the bank. And you know pretty well, there are preventive corrective actions. In case the bank is not doing good, immediately banks are put under PCA framework, and preventive corrective actions, once they are placed, then bank is automatically gets restricted in their various functionings. Bankers are being rated on CAMEL's approach. CAMEL stand for capital adequacy, asset quality, management, earnings, liquidity. So these are the CAMEL. CAMEL's approach is being adopted for supervising the banks. Pillar number 3 is about the market disclosure. Market disclosure is nothing but whatever the financial statements announced by the bank, there are many things which are included there which otherwise not explicitly available to the people. So detailed information with regard to that should be made available, and for this purpose under Basel III there are 14 disclosures. Okay, and all those 14 disclosures are compulsorily required to be disclosed by the bank with regard to the corporate governance and sound banking practices. So again, exam question, credit risk is calculated by the banks mostly on a standardized approach. A standardized approach is nothing but there are risk weights. Risk weights are being applied. And some of the banks like Union Bank of India and the big banks, they have moved to internal rating based approach, but not yet implemented. Market risk is again calculated on the basis of value at risk basis based on the calculation of duration. So market risk is calculated on the what statements you are submitting to Reserve Bank of our head office relating to maturity buckets, and that gap, okay, calculation of duration gap and value at risk is being computed for arriving at the risk weighted assets with regard to market risk. Then third thing is operational risk. For that purpose, Reserve Bank of India says there are 3 different methods: basic indicator, standardized, and advanced approach. All the banks are at present following only basic indicator approach, and basic indicator approach is one factor is given to the bank, and that is a 15%. 15% of last 3 years gross profit, okay, or last 3 profit years where bank earned the gross profit, 15% of it need to be considered for the purpose of arriving at risk weighted assets of operational risk. Okay, so credit risk 3 methods: standardized, foundational internal rating based approach, advanced internal rating based approach. These are the 3 methods of which standardized is implemented. Market risk, there are 2 methods: standardized approach, internal risk management model, and value at risk model. Okay, and maturity method. Okay, standardized approach is being implemented categorically on the basis of maturity buckets. Then third thing is basic indicator approach, standardized approach, and advanced measurement approach. And basic indicator approach is got being adopted by all the banks. So credit risk, market risk, and operational risk. Once the risk weighted assets are calculated, against which CRAR requirement are being stated, and that requirement is 9% of risk weighted assets. That is the regulatory capital. Compulsorily a minimum capital required to be maintained. Okay, though Basel says 8%, Reserve Bank of India is implementing 9%. Okay. As far as the other aspects concerned, let me tell you that risk weights are another question, exam point of view. So there are many assets which are on the asset side. They are excluded, such as cash, deposit, gold, investment in Kisan Patra, life insurance policies. All those aspects are deducted. And there is a risk weight even for a staff loans. Okay, loans to staff members. How much is the risk weight calculated? That is a 20%. 20%. Okay, and risk weight for loans which are guaranteed by ECGC, 20%. Claims that is guaranteed by the central government, there is a 0%. 0%. Okay, and in case there are public sector enterprise exposure is taken, then as per the Moody's rating, so we take the risk weight. Okay, then the claims against the financial guarantee, performance guarantee, need to be converted into a credit conversion factor. The financial guarantee credit conversion factor is 100%. Performance guarantee credit conversion factor is 50%. Okay, 50% risk weight, and all NPAs 150. Hello.
What is credit conversion? Please give some light.
So see, first of all, guarantees are never appearing in the balance sheet towards asset side. Correct, bro? So guarantee, performance guarantee or financial guarantee, they don't appear on the balance sheet on asset side. They always appear on the below the balance sheet. Okay, once asset liabilities are drawn, then you are just writing the figure that this much of amount of guarantees your branch has issued, and all these guarantees issued by all the branches put together is a figure of guarantees issued by the bank. And these guarantee can be of two types: financial guarantee and performance guarantee. Okay, now kind of guarantee what you gave, depending upon that, you need to consider the part in the credit. How much is the loan amount to be considered? Because these guarantees are only the promise given by the bank, not yet regarded as the liability of the bank, isn't it? They are not on the list of the liability. Okay, they are simply issued, but once there is a possibility that it may get converted into a loan, and if it gets converted into a loan, so that there is definitely the risk factor need to be computed. So how much factor need to be applied is a credit conversion factor. For a guarantee, how much is for example, 100 rupee guarantee is issued, how much to be taken into account? So if it is a financial guarantee, 100 rupees for 100 rupee. If it is a performance guarantee, then it is a 50 rupees for 100 rupee guarantee. This is what. Okay, what is this performance guarantee, financial guarantee? Let me discuss when we talk about the guarantee part and the non-fund based advance part. Okay, at this juncture I don't want to enter that because we will lose the track of the Basel II, Basel III. I think I am making a point. I hope you appreciate that. I hope you all appreciate.
Sure, sir.
Yeah.
We do.
Okay.
Sure.
Yeah. Then even there is a documentary letter of credit, there is a 20% risk weight is computed. Because though documentary letter of credit, there is always a possibility that the other bank may not oblige, isn't it? So that there is always a possibility that risk is always taken 20%, the documentary. Okay, and it is a standby LC is nothing but as good as a guarantee. Therefore, it is a 100%. Okay, so consumer credit 100% risk, credit card 125% risk weight, capital market exposure, that is loan against shares or loan to share brokers, 125%. Okay, so this is how the various risk weights the Reserve Bank of India specified. I hope then CGTMSE guarantee or guaranteed by CGTMSE guarantee actually 0% risk weight. Why? You all should be motivated to give loan against that particular guarantee. That is what is the idea. Okay, is it clear? Is it clear? So credit rating agencies, yesterday also I told, again I am repeating it. Remember, there are 6 approved credit rating agencies: Brickwork Rating, Credit, that is CARE, that is CARE, ICRA, okay, Credit Analysis Research Limited, CRISIL, ICRA, India Ratings, MERA. So these are the 6 approved credit rating agencies, domestic credit rating agencies. There are international credit rating agencies: Fitch, Moody, Standard and Poor. Okay, and then these rating agencies report is required to be obtained. Okay, credit rating report is required to be obtained with regard to all the loans and advances which are more than 7.5 crore. So external credit rating makes the risk weight little bit lesser with regard to the loans given, provided the risk weight is specified as a good one. If it is a AA rating, then only 20%. Okay. Like that, the 20 to 150% is the different risk weights. Okay. And they are different from credit bureaus, which we discussed yesterday, that is credit information companies. Okay. And credit information companies are CIBIL, Equifax, Experian, Highmark, and all these four gives the report. And banks are mandated to provide information to all the four bureaus. And now Reserve Bank of India makes it clear that there must be a single similar format need to be devised for providing information to all them, and that need to be implemented by banks latest by the year end of 2022. Okay, by that time we must be made ready our systems according to that requirement. Okay, so then next important part, I'm talking a very important thing. Please listen very carefully. Okay, please listen very carefully. Now Basel III important elements I'm talking. Number one, Basel III came because of 2008, the financial crisis which world has faced. And this has given a significant insight that capital strength is a very important strength of the bank, and therefore quality of capital required to be improved upon. And that is why the quality capital improvement is the factor behind. And number one, tier 1 capital requirement is raised to now 7%. Okay, common equity tier, earlier it was only hardly 3.5%. Now it is improved to 7% tier 1 capital, which includes the common equity tier 1 5.5 and a maximum the additional tier 1 capital 1.5%. Hope you are listening very carefully. Common equity tier 1 capital 5.5% and maximum additional tier 1 capital 1.5%. In addition to that, there is a capital conservation buffer got additionally introduced. This factor was not earlier there. Then there is a counter cyclical buffer. This is also added under Basel III. Then very another important factor, that is leverage ratio of tier 1 capital to total assets of the bank, tangible assets of the bank. That is also calculated under the Basel III only. Then there is a liquidity coverage ratio is calculated under Basel III only. And net funding stability ratio is also introduced under Basel III only. So please make a note. What is that introduced by Basel III? First of all, common equity tier 1 and additional tier 1. Like tier 1 got divided into two. And number two, CCB. CCB is capital conservation buffer. Then there is another CCB, that is a counter cyclical buffer. Then leverage ratio, then liquidity coverage ratio, and net funding stability ratio. And all these are required to be implemented by 31st March 2019. But for your information, these are got mandated by Reserve Bank of India to get implemented even up to October 2021. Okay, so for example, let us understand now the capital structure as per the Basel III. Okay, capital structure as per Basel III is number one, common equity tier 1 capital compulsorily 5.5. Additional tier 1 is maximum, it can be 1.5. So minimum 5.5 common equity tier, maximum additional tier 1 capital is 1.5. Even if there is more, for the purpose of calculation, only 1.5% is taken. And 1.5% of risk weighted assets. Which are all the risk weighted assets? The risk weighted assets calculated as per what we have discussed for credit risk, market risk, and the operational risk. Okay, then put together is a minimum tier 1 capital, that is 7%. 7% is a minimum tier 1 capital. To this, there is a capital conservation buffer is got added. What is this capital conservation buffer? This is nothing but a common equity which is there, that part which is in the form of the reserves, that is 2.5% got added. So put together 9.5% is a tier 1 capital. That is common equity tier 1, additional tier 1, as well as capital conservation buffer. Capital conservation buffer. Hope you understood this. Then maximum tier 2 capital can be only 2%. So 9.5% plus 2% is nothing but 11.5%. That's how this is the regulatory capital requirement under Basel III. Anybody has got any question, please ask.
Sir, counter-cyclic capital buffer.
Counter-cyclical capital buffer is nothing but a capital which may be required by the bank during the adverse scenario. When the bank is doing good, let us make a reserve for that purpose. That is what is a counter-cyclical buffer.
That is 2.5%, na, sir?
No, that is a capital conservation buffer.
What is the percentage of that, sir?
That is 2%.
Okay, thank you, sir.
Okay. Now, okay, let us see now. The capital conservation buffer is the capital which is required to be built by the bank during the normal times, and it is required to be maintained at 2.5% by 1st October 2021. Okay, 2.5% should have got achieved. Okay, so every time because of one or other reason, extended. Now Reserve Bank of India will check in our March 2022. Okay, clear? Now second, liquidity ratio. There are 3 liquidity ratios. One is a leverage ratio, second is a liquidity coverage ratio, third is a net stable funding ratio. Now what is the leverage ratio? Leverage ratio is a total capital, that is a tier 1 capital. Okay, tier 1 capital that is including common equity tier as well as additional tier 1 capital against the exposure what bank is taking. Exposure is what bank is taking, and how much it is required. It is yesterday also I told you while talking about systemically important banks, domestically systemically important, for them it is 4%. For all others, 3.5%. Very good. And this is to be implemented from 1st October 2019. Okay. The next is the liquidity coverage ratio.
Sir, kindly repeat, sir.
Okay. See, capital requirement, that is a capital is how much? Tier 1 capital, common equity tier 1 and additional tier 1 capital is on the denominator side. Okay. Then the exposure is on the other side. These two are compared, and against the exposure, how much is the capital requirement? That is at least it should be the 4%. 4% of exposure, it should be compulsorily for whom? For domestically systemically important banks, SBI, ICICI, HDFC, and for all other banks it must be 3.5%. Hope it is clear now.
Yes, sir.
Okay. Then another important part is liquidity coverage ratio. What is this liquidity coverage ratio? See, you know pretty well, on the balance sheet we have got all type of assets. Out of them, high quality liquid assets such as cash in excess of CRR, investment in government securities for SLR requirement, corporate bonds, commercial papers with 15% haircut, marketable securities with 50% haircut. All those are calculated as a liquid assets. Against that, outflows are taken into account. Okay, and outflows for a period of 30 calendar days means 30 days outgoing. What is the 30 days outgo? All the deposits which we are holding of the customer, which are likely to be due in coming 30 days. 30 days due deposits. For that, current account some part is computed, saving bank account some part is computed, as well as the other deposits are also taken into account. Please make a note, 100% saving bank, 100% current account does not taken. Okay, so that's the way it is calculated as net cash outflows over next 30 calendar days. Against that, how much are the liquid assets? It should be at least 100%, means at least it should match 100%, and it is implemented in country from 1st April 2021 onwards. Hope it is clear. And for the purpose of this, for the purpose of considering the deposits which are there, okay, the small business customers are the criteria increased from 5 crore to 7.5 crore. for retail deposit purpose. Now up to 7.5 crore is considered under retail deposits. Okay. Then net stable funding ratio. What is this net stable funding ratio? The available stable funding minus the funds available to the banks for that purpose. Okay. Then required stable funding minus the lending requirement. So it is simply a ratio is to maintain a stable funding profile comparing their assets and off balance sheet activities. So net stable funding ratio promotes the strength of the bank over a longer time horizon, requiring banks to fund all their activities with the stable funds, not the moving funds. With the help of stable funds means again their own money more, and that's the way it goes. Okay, this is got implemented in the country from 1st October 2021 onwards. Okay, now what are all the elements which are included in the common equity tier 1? Paid up capital, share premium, statutory reserves, and very important for exam is revaluation reserves at a discount of 55%. Revaluation reserves at a discount of 55% are included in common equity tier 1 capital. Okay, common equity 1. Okay, additional, there are only the bonds, those bonds which are issued as a perpetual debt capital instruments and perpetual non-cumulative preference shares. They are additional tier 1 capital, and put together that should be total how much? 5.5 plus additional 1.5, that is 7%. Done? Is it clear? So there are two important points in the capital. Number one is a revaluation reserves at a 55%. Revaluation reserves at a 55%, and the capital reserves which are by sale of assets. Okay, capital reserves which are created with the sale of assets, they are also included in common equity tier 1 capital, which otherwise in Basel 1 and Basel 2 they were in tier 2. So this is what is the important change to understand for exam purpose. Then under the tier 2 capital, the general provisions on standard assets, provision held for the country exposure, investments reserve account which we bank maintain, all those things are included in tier 2 capital. In addition to that, there are bonds which are there for various periods which we issue, which are repayable less than 10 years period of time. Those are all included in tier 2 capital, and there even that also are discounted every year for the purpose of computation, not more than 5 years tenure. Every year 20% discounting is done, so that at the end the 80% discounting is done on the last 1 year left over. So that's how the tier 2 capital. Okay, hope you got the clarity about the Basel. Okay, and now let me move to something new, that is called fundamentals of credit, basics of credit. Shall I begin? I hope we are on time up to this point of time. 1 hour is left over, and we have completed entire general banking, including risk management Basel. Now basics of credit. The number one is a exposure norm, and as you know, banks are permitted to take exposure only up to what? 15% of capital funds, or 25% of capital funds, or 20% of capital funds. Can anyone tell me how much exposure bank can take?
20%, sir.
20% of the capital funds. Okay.
10%. 10%.
No.
15%.
20%
plus 5% board approval.
20% plus 5% with the board approval. Okay.
Sir, single borrower 20%, group को 25% और 5% board approval.
Very good. Single को 15%, group को 20%, group को 20%, and additional 5% can be taken with the approval of the board. Okay, with the approval of the board.
For total advances of
total advances नहीं, एक unit को. For example, Reliance is coming to Union Bank of India. Reliance Industries is coming to Union Bank and asking a loan of 10,000 crore. How much? 10,000 crore. Now question is, can you really sanction? Reliance is a good company, strength is there, everything is fantastic, but can you take exposure on single party, that is 10,000 crore? That is the question. What Reserve Bank of India says, you cannot take a exposure more than 20%. again of your eligible capital base, that is a tier 1 capital, उसका आप 20% से ज्यादा नहीं ले सकते किसी भी single party के ऊपर. So that is what is a criteria. Okay, 20% of the capital base, 5% extra, 5% extra, and that extra is only exceptional cases with the approval of the board, with the approval of the
group के लिए?
Group के लिए maximum 25% of the eligible capital base. Earlier 40 वाला फंडा था, वो निकल गया. Okay, now it is only 25% of the eligible capital base. और इसके लिए भी अगेन चाहिए तो 5% का एक्स्ट्रा ऐड हो सकता है, बट आपको कंपलसरी उसको डिस्क्लोज करना पड़ेगा कैपिटल आपने ये ऐसा एक्सपोजर लिया है. अदरवाइज रिजर्व बैंक ऑफ इंडिया इज वेरी अगेंस्ट ऑफ इंक्रीजिंग more than 25% exposure on a single group of companies. Okay, so this is what is one thing. Then next is, which are all the different type of credit facilities? Which are all the different type of credit facilities bank gives? Okay, that lending restrictions are there, am I right? The bank gives a various type of credit facilities, but can bank give all type of loans? Which are all the loans which bank cannot give? Loan against bank's own share, can the bank give?
No.
Loan against bank's own shares?
No, sir. No, no.
No, sir. No, isn't it? Then loan against partly paid shares, can a bank give?
No.
Yes.
Loan against partly paid shares?
Yes, sir. Yes, sir.
No.
Okay, then can a bank give? Can a bank hold any company shares more than 30%?
No.
No, because section 19(2). Okay.
No.
Okay, no, isn't it? So that's the way these things. Then next, no loan against to any board bank's director. Okay, not only our bank director, any bank's director cannot get a loan more than 5 crore. Earlier it was 25 lakhs. Now the limit is increased to 5 crore. Okay, so in case he requires, then Reserve Bank of India approval is required. Okay, no advance is available against commodities under selective credit control. Luckily, as of today, except for the sugar for levy, there is no item in the selective credit control. There is no loan can be made available for a unit which is ozone depleting substances. Okay, so these are the few things I thought I'll talk to you. And then in any case, loan against individual person, loan against share, maximum how much? Maximum 20 lakhs. 20 lakhs. Okay, and that too in case in a physical form 50% margin, but now there is no physical form. Still, for the purpose of academic purpose, you may remember it. Okay, paper based security 50%, demat based 25% margin you have to maintain. Paper based only 10 lakhs loan, demat 20 lakhs loan. Okay, bank should not grant loan advance against a gold bullion, primary gold. Okay, it can give loan only against the jewelry. So these are. Secondly, for any MSME unit, you can calculate the working capital requirement only on the basis of the turnover, that 20% of turnover, provided the limit maximally is going not more than 5 crores. So these are all the regulatory restrictions. These are all the regulatory restrictions. Then bank cannot sanction loan against the FDR of other bank. Bank cannot sanction loan against certificate of deposit. Bank cannot sanction loan against the IDRs, international deposit receipts. Okay, Indian depository receipts. Bank cannot sanction loan. Okay, and any borrower who is enjoying, any borrower who is hello.
Sir, as per NAYAC committee recommendation, recently I think some changes ki usme 25% of turnover, then 6.5% margin.
Okay, NAYAC committee recommendations तो काफी पुरानी है. Okay.
नहीं, recently amendments उसमें कुछ
नहीं सुनिए, 20% of turnover. Okay, 20% of turnover का limit की बात है. 25% of the turnover is considered as working capital gap. Working capital gap. Working capital gap तो 25% कभी भी रहेगा, क्योंकि हम आज के डेट में कस्टमर्स का मार्जिन कितना एक्सपेक्ट कर रहे हैं? 5% of the turnover. इसीलिए हम लोन कितना दे रहे हैं? 20% लोन दे रहे हैं. Is it clear? 25% is the working capital gap 5% is the borrower's margin, and we are giving 20% loan. Is it clear?
Yes, sir. Yes, sir.
Now, instead of that 5% margin, banks can take an exposure more by reducing that margin. That is what leverage is given by Reserve Bank of India, but it is not mandatory. अगर आपको लगता है कि कंपनी काफी अच्छी है, एमएसएमई है, उसको बढ़ावा देना जरूरी है, तो आप चाहे तो मार्जिन रिक्वायरमेंट कस्टमर की कम करके उसको आप ज्यादा की फंडिंग दे सकते हो. इज इट क्लियर?
सर इसमें डिजिटल ट्रांजैक्शन का और किया है ना कुछ?
5%.
कहां से कहां जा रहे हो? ओके चलो ठीक है, मैं नहीं जाता हूं अभी, मैं नहीं घूमता हूं इधर उधर. ओके देन 1500 मिलियन मतलब 150 करोड़ से ज्यादा का किसी को भी अगर सैंक्शन वर्किंग कैपिटल लिमिट अगर सैंक्शन किया गया है तो उसको कंपलसरी 2 हिस्सों में बांटना पड़ेगा. एक हिस्सा होगा लोन कंपोनेंट का, दूसरा हिस्सा होगा रनिंग अकाउंट का. और लोन
60%,
कंपोनेंट
40%.
या 40% एंड 60%. दैट इज 40% इज अ लोन कंपोनेंट, 60% इज योर क्या कहते हैं उसको, सीसी कंपोनेंट. ओके WCTL कंपलसरी करना पड़ेगा. ओके देन मेरे ख्याल से इंटरेस्ट ऑन एडवांसेस ऑल ऑफ यू नो, आई डोंट वांट टू स्पेंड टाइम ऑन दैट. बेस रेट, MCLR and the external benchmark lending rate. Okay, and as far as MCLR concerned, there are only 2 important factors need to be considered. That is the marginal cost of funding, and to that we need to take into account the negative carry on CRR. What is mean by negative carry on CRR? Negative carry on CRR is nothing but the loss which we are incurring, or there is a no interest earned on the funds which are parted with the RBI, and still we need to make the payment of that interest to depositor. That element is negative carry on CRR. That also need to be considered under MCLR. And the external benchmark lending rate, you can take additional factor on your spread, isn't it? That is what a spread you can take. And why the Reserve Bank of India wants the banks to move to EBLR? Because let's have the transparency. Let's have the transparency. MCLR के component कौन से है? Marginal cost of funds, negative carry on account of CRR, operating cost, and tenor premium. एक्सटर्नल बेंचमार्क लेंडिंग रेट के पैरामीटर्स कौन से है? एक्सटर्नल बेंचमार्क जो आपको मिल रहा है वो एज ऑन टुडे द रिपो रेट यू आर टेकिंग, एंड स्लोली यू कैन मूव टू FBIL. ओके, फाइनेंशियल बेंचमार्क इंडिया लिमिटेड कंपनी जो है, उस कंपनी द्वारा हमको जो रेट मिलेगा ओवरनाइट माइबर का, उसको लेके भी हम चाहे तो आगे चल के इसको कर सकते हैं. अब लोन देने के लिए हमारा मैकेनिज्म कैसा है? इंडिविजुअली आल्सो वी कैन गिव लोन, वी कैन गिव लोन जॉइंटली आल्सो, वी कैन गिव लोन जॉइंटली आल्सो. And the Reserve Bank of India says making a consortium is not a mandatory thing. Making a consortium is not at all a mandatory thing. It is up to bankers to take a call. If your exposure is going more, your risk appetite is not so, then you can make a joint and make a consortium. Consortium and multiple banking, the only difference is consortium, there is an agreed proposal, agreed processing, and agreed documentation, whereas in multiple banking, every bank may hold their own securities and they may hold their own the appraisal, and that's the way it goes. And there is a third aspect which is introduced as a syndication of loan. Shetty committee in 1993 introduced this concept, and there could be a job done by a bank to make all the bankers to come on a one forum to take exposure. Okay, and in any case, the earlier guidelines with regard to consortium and the joint lending agreement are now liberalized. It is a bank's own way. Very, very important thing which I wanted to tell you is this time examination is legal entity identifier. What is this legal entity identifier? It is a 20-digit number, required to be obtained for all the exposures, of more than rupees 5 crore, Okay, now even including this legal entity is required to be obtained even for a payment transaction. Means if somebody is doing an RTGS transaction, for more than rupee 10 crore, compulsorily that person need to possess the legal entity identifier, that is a 20-digit code. Okay, so these are all the aspects I thought I'll talk to you with regard to basics of the lending. Okay, basics of the lending. Then there is a funded advance and non-funded advance.
50 crore.
Yeah, कौन सा?
Transaction.
स्टार्ट किया है 50 करोड़ से, बट
Yes,
इसको
sir.
लाना कहां तक है? 5 करोड़ तक लाना है.
But right now it is 50 crore, na sir? For
As of
RTGS.
now it is 50 crore. Okay. As of now all entities making payment of rupees 50 crore and exposure of 5 crore. Okay. एक बार चेक कर
सर
लेना.
बैंक की पॉलिसी में 50 करोड़ है और उसमें लिख रखा है 5 करोड़ टू 50 करोड़ अभी रोड मैप बनाएंगे.
रोड
तो
मैप
अभी
बनाएंगे.
एग्जाम में क्वेश्चन आते हैं तो फिर क्या हमको आंसर लगाना है?
एग्जाम में क्वेश्चन आपको आता है ऐसे ही कि लीगल एंटिटी आइडेंटिफायर इज एप्लीकेबल टू, तो आपका जवाब क्या होना चाहिए? 5 करोड़ के लिए. अगर मान लो आपको कहा गया है कि बाय दिसंबर 2021 कितना होना चाहिए, तब आप रोड मैप देख के उसके अंदर चेक करके डाल सकते हो. इज इट क्लियर?
अगस्त में अमेंडमेंट हुआ 5 करोड़ का.
ठीक है. ओके. आपको जो फिगर बता रहा हूं याद रखिए, एग्जाम पॉइंट ऑफ व्यू मेरे ख्याल से आप जो है ना, आप चलते रहिए. आपको जहां जहां शक लगता है ना, आप एक काम कर सकते हो, आपके पास आज की रात है, कल का दिन अवेलेबल है, आप आराम से वेरीफाई कर सकते हो. एंड यू कैन रेज मी आल्सो, आई विल आल्सो करेक्ट माई सेल्फ, वी विल मूव टुगेदर, डोंट वरी. आई एम नॉट टेलिंग दैट आई एम फार सुपीरियर देन ऑल ऑफ यू. Okay, I have also collected this information from here and there, and there is every possibility that I may also commit a mistake. But as far as possible, I am trying to give you the correct thing, because I know your future is at stake, not my future. And therefore, as much as possible, I am trying to give you the correct information only. Okay. As far as concerned, the bank provides the two type of advances. One is a funded advance, another one is a non-fund based advance. What is the non-fund based advance? Non-fund based advance is nothing but inland guarantees. Then letter of credit. Now inland guarantees are governed by what? Inland guarantees are governed by Indian Contract Act. Letter of credit is governed by what? Letter of credit is governed by the UCPDC 600. UCPDC 600, whether it is a law, it is not at all a law. That is only a guideline given by International Chamber of Commerce, that anybody who is entertaining a facility of letter of credit, they may add the clause of this LCEs under the UCPDC guidelines, then only the clauses are applicable on that. If it is not explicitly made available on the letter of credit, then UCPDC is not applicable for that. UCPDC is not a law. Indian Contract Act is a law. Therefore, all provisions in Indian Contract Act are otherwise also are applicable on guarantee. Guarantee can be two types, the three types. One is a financial guarantee, another one is a performance guarantee, third one is a deferred payment guarantee. So what is a financial guarantee? A bank takes the exposure. Bank takes the exposure on a company, based on their requirement, in the form of committing to some beneficiary that in the event, in case the failure of their constituent with regard to performing a particular contract, not completing the job on time, then bank is liable to some amount, and that's the way it undertakes the liability for performing a particular job. Okay, no direct commitment of money by our constituent. Such a guarantee is performance guarantee. And whenever there is a financial commitments are to be met by our constituent, and that is guaranteed by the bank, then it is a financial guarantee. Deferred payment guarantee is nothing but committing by the bank on behalf of customers that whatever the deferred payment, installment payments are committed by their constituent, in case he doesn't meet, then the person who has supplied the capital goods can make a demand on the bank, and bank is obliged to fulfill that commitment. This is what is all about the performance guarantee, financial guarantee, and the what you can say, the deferred payment guarantee. Now EBG also are available, that is electronic bank guarantee through structured financial messaging system, and therefore the guidelines are equally applicable for that also. Okay, and every bank guarantee need to compulsorily have the limitation clause, and bank guarantee is limited to the extent of the amount, if at all it is claimed before that particular date. So that's the way it takes care of the other aspects relating to the guarantee. Okay, where bank's liability gets limited. Bank's liability gets limited only to that particular amount, and provided the claim is made by the beneficiary before that particular date. If the date got exceeded, then there is a maximum claim period available is not at all more than 1 year. So that's the way this clause is known as limitation clause. And limitation clause incorporating in a BG is compulsory. Now, any BG cannot be normally more than 10 years period. Reserve Bank of India removed this clause that LG period can be maximum 10 years. Earlier it was. Now Reserve Bank of India says no. But however, banks keeping in view their risk, they are restricting it for 10 years period maximum. Okay. If question comes in exam, you have to tell as per Reserve Bank of India guideline, there is no maximum period for BG. Okay, but if question asks specific to your Union Bank policy, then you have to take a case of Union Bank policy, that is acceptance policy or counter acceptance policy is there. So based on that, you can answer your
सर
question.
लिमिटेशन पीरियड एक बार बता दीजिए.
लिमिटेशन पीरियड नहीं, लिमिटेशन क्लॉज. लिमिटेशन क्लॉज क्या होता है कि हर बीजी के एट द एंड में आपको एक पैराग्राफ ऐड करना होता है. Whatever stated here in above. Okay, whatever stated here in above with, okay, irrespective of what stated here and above, bank liability is limited to this amount and liability is restricted only up to this date, provided claim is made by the beneficiary by such and such date. Okay, so this kind of limiting our liability in terms of money, in terms of period, is compulsorily required to be incorporated in BG. Otherwise, there is a possibility that liability may get open for a period of 30 years plus, because government has got that power to make a claim by 30 years. And you as a banker enjoy this as a public sector undertaking to have this clause incorporating and limiting your liability, though it is against the law. Okay.
But regarding the claim period, sir?
That is what a claim period can maximum be. Means though after the period is over, there may be a dispute raised, isn't it? There may be a dispute raised. That dispute also can be maximum raised by what period? Maximum it can be raised within 1 year period. Okay, not beyond that. And that is what is a specific insertion in the 2004. Is it clear?
Sir, claim period can be less than 1 year.
Less than 1 year can be, but it always goes that 1 year, because that is a general rule given by Reserve Bank of India. So you also definitely go along with that. Okay, you don't mention in the BG that you have an additional 1 year for making case against me. Okay, is it clear?
If applicant want to give a claim period for 3 months or 6 months, may we give?
Yeah, you can.
Okay, sir.
You can. Okay.
So, sir, while we are controlling the BG in Finacle, there also the claim period it demands. Then it is given 1 year. I think it is
because
a default
there is a
1 year.
Reserve Bank of India guideline. It has to be 1 year, because otherwise also, see, first of all, one thing, understand one thing. Actually, it is a beyond the class, but understand one thing: as a banker, you are growing up. Anything which restricts anyone to go against the law is not at all permitted in the law. You cannot make someone to not to make claim against the limitation period, because as per the Limitation Act 1963, government has got power to make a claim within 30 years. How many days? 30 years. And what you are doing? You are stopping the government, and you are making it made available only within the limited period against the Limitation Act. Limitation Act provides it. So why you are doing so? Because you as a public sector organization entitles for that exemption under section 128 of Indian Contract Act. And by exercising those powers, you are making use of that and specifically mentioning that maximum it can be 1 year. But actually, to be very frank, why those government authorities will stop from making the claim before the due date? They can make the claim well before the due date. Okay, that due date is there. You have to make a claim by date is there. All those things are explicitly stated in the BG. So they will make a claim by that date only. I hope I have made it clear. Please let me continue. There are many things I need to talk. Okay. Then there is a term called as LTV ratio. What is mean by LTV ratio? Loan to value ratio. And how much should be loan to value ratio is as per the bank's own guidelines. However, if the LTV ratios are specified by Reserve Bank of India, and according to that there are risk weights provided, bank need to calculate risk weights according to that. Simple to that. Okay. Then consortium, multiple banking, legal entity I have already discussed. And which are all the methods of assessing working capital requirement? There are 4 methods. There are 4 methods. Number 1 method is turnover method. Number 2 method is flexible bank finance, that is which Union Bank of India calculates. It is nothing but maximum permissible bank finance method. And third one is cash budget method. And fourth one is net own fund methods. Okay, these are the 4 methods by which bank can calculate the working capital requirement. And the 4th method, which I said, it is exclusively applicable for only the
NBFC.
NBCs, that is RNBCs, and the all other 3 methods are applicable to other entities. Out of them, cash budget method is applicable only to seasonal industries or software industry. Seasonal industry, software industry, and the remaining 2 methods are only made available for all other industries. Is it clear? Is it clear? Then
Yes,
next is the collateral security norms. Let us make the point very clear that Reserve Bank of India don't say that
sir,
you must take collateral. Yeah.
Sir, just flexible bank finance method.
See, there is actually MPBF and Union Bank of India. What it did, they have just treated with some of the elements such as what can be considered as current asset, which is not otherwise to be regarded as current asset. For example, I am telling a example. For example, I am telling that a bank guarantee purpose, you have taken a margin. For bank guarantee purpose, you have taken a margin. That margin in the form of fixed deposit is available with the bank. Is it clear? Now, whether it is to be treated as a current asset or not, that is a big question. In terms of general concept, it cannot be treated because that money is blocked till that particular period of time the BG runs. But Union Bank of India considers it as a part of current asset, so that it becomes a flexible part for beneficiary, that is our customer. And that's the way few elements which are treated by the bank to consider that item as current asset or otherwise. And that's the way instead of talking it as a maximum permissible bank finance, we consider it as a flexible bank finance method. Is it clear? One example only I told. I don't want to enter into the assessment of working capital requirement. It is not my class. Okay.
Yeah, thank you, sir. Thank you.
Next, collateral security norms. Okay, collateral security related guidelines Reserve Bank of India don't give. It do not say that you must obtain collateral security. You don't obtain. It only says where you must give the collateral free loans. Now let us start one by one. In agriculture advances, for the crop loan purpose, how much can be the secured collateral free loan? 1.60 lakhs. 1.60 lakhs. Is it clear? 1.60 lakhs.
Yes,
Number 2, loan to micro and small enterprise. Loan to micro and small enterprise up to an amount of rupees 10 lakhs. Up to an amount of rupees 10 lakhs collateral free. Then loan to agriculture graduates. Loan to agriculture graduates under agri clinic and agri business. Loan to agriculture graduates under agri clinic and agri business up to an amount of rupees 5 lakhs. Okay, these are all collateral free loans. Education loan up to 7.5 lakhs. Up to 7.5 lakhs. Collateral free loans. However, more than 10 lakhs, more than 4 lakhs, you are permitted to obtain a personal guarantee. Personal guarantee of the third party you are permitted to obtain. Okay, so this is what all about the collateral free loan. And whenever the bank is giving a collateral free loan, and that collateral free loan may go up to any amount, the amount can be get covered under the various other schemes such as CGTMSE and NCGTC. Mudra loans which are granted by the bank are covered under
CGTMSE.
Mudra loans,
CGFMU.
CGFMU of NCGTC.
CGFMU.
NCGTC. Okay. NCGT. The Stand Up India scheme is there. Under Stand Up India, you can sanction a loan more than 10 lakhs, up to a loan of rupees 1 crore.
1 crore.
Isn't it? And that can be collateral related guideline. Reserve Bank of India is not giving. Okay. It is not telling that you don't obtain collateral there. But in case you are not obtaining collateral, there is a cover available under a scheme called as the guarantee scheme for Stand Up India. And that is by NCGTC. Okay. NCGTC. So please make a note. CGTMSC for various other purposes are available, whereas these are exclusive schemes which are applicable for NCGTC. Okay. Then the important ratios for working capital are current ratio, quick ratio, debt equity ratio, and all other turnover ratios. These are the important for working capital. When it comes to the term loan, in addition to these ratios, the important ratio is DSCR, profitability ratio, and the break-even point. These are the few important areas you must have to make a note of it. And based on this, actually, your loan policy works. Your loan policy says that as per your loan policy, there is a large corporate vertical, mid corporate vertical, and the MSME vertical. And these three verticals are there with regard to managing credit. And large corporate verticals, they have to take exposure more than 250 crore, middle corporate 100 to 250 crore, and the MSME verticals, they any exposure more than FGMOs, the delegation, okay, up to 50 crore, they can go with MSME verticals. Okay. Then financial benchmarks is another important question, exam point of view. Remember, current ratio benchmark is 1.15. Current ratio benchmark is 1.15. For export oriented unit, it can be brought down to 1.10. Debt equity ratio exposure benchmark is 3%. Okay, financial benchmark is 3%. Total outsider liability to tangible net worth ratio is 4%. For a trade, it is 5. Okay, for a trade, it is 5. Then means trade means the retail traders, it can go up to 5. Then
so you are saying this should be less than 4 and less than 5.
This is minimum, means that deterioration, if it is more than 5 means it is not a good thing. See, I am not taking the class on the ratio analysis. Please make understand, current ratio 1.5 means more than 1.15 is a good one. Okay, debt equity ratio 3 means less than 3 is better one. Total outside liability to tangible net worth, a maximum it can be 4. Anything lesser than that is a good for the bank. Trade maximum it can be 5. What, see, TOL means others money, TNW means owners money. So TOL, that is outsiders money, can be not more than 5 times of the owner's money with regard to trader account. With regard to others, it can be more, maximum 4 times. So less than that, if it is there, it is all the way good to the bank. Average DSCR and the DSCR. DSCR benchmark is 1.5% and the average it can be minimum 1.5. Internal rate of return is applicable for 25 crore and above advances, and with a 5-year repayment, it must be 3% plus your 3-year MCLR. 3% plus your 3-year MCLR must be the IRR. Internal rate of return is nothing but a rate at which the inflow of the cash at the present value becomes the 0 with regard to outflow of the cash. So that is what is internal rate of return. And there are takeover norms. Under the takeover norms, that these all things are further improved. Current ratio 1.17, TOL TNW 3, trade it is 4, DSCR 1.5. This is what. Then as usual, I have already told methods of assessment. Valuation reports are required to be 2 in case of 5 crore and above exposure. Okay, and the valuation for 5 crore and above, not exposure, I'm sorry, any particular property. Okay, property value, if it is more than 5 crore of a particular property, then only 2 valuation report. Okay, title search are required for 2 when there is a 2 crore and above exposure is being taken. Okay, and there is a MSOD, QPR related guidelines are prescribed. Vetting of documents, CPA, we will try discussing when we discuss with regard to your the monitoring of advances. All these things are pertaining to monitoring. And one more important element got added is you have to obtain passport details of the constituent in case your exposure is more than 50 crore. Why do you need passport details? Can
So
anyone
that
tell me?
next Vijay Mallya doesn't form, sir.
Nirav Modi.
Okay,
lookout circular, sir.
I don't want you to tell me that. I want you to tell only the promotion test related question, and that is
hot listing, sir.
that is the answer is to request the authorities to issue the lookout circular. To issue the lookout circular, these details are required. What is lookout circular? The lookout circular can be issued only by Ministry of Home Affairs, and bank need to specifically request the authority to issue that, so that the person cannot flee out of the country, okay, when he has got exposure. Okay, so this is what is a guideline, and therefore we are compelled to obtain the passport details, and hope we are doing good. Now it is 9 o'clock. Now it is 9 o'clock, and I think there are around another 4-5 areas are left over, and of them very important area is priority sector advances. Priority sector advances, and let us understand one thing, that priority sector advances, there are benchmarks, and as per the benchmarks of priority sector advances, there are various segments, and segments are there based on that the benchmark.
लेट जाओ यार.
Basically
लेटो.
there is, okay, so basically there are segments which are 8: agriculture, MSME, agriculture, MSME, export, housing, agriculture, MSME, export, housing, and then renewable energy, education, renewable energy, education, and social infrastructure, and last is other priority sector. So these are the segments which are there under the priority sector. All the segments put together, our advance against the adjusted net bank credit, that is A and BC, should be minimum 40%. And these guidelines are applicable to all banks. These guidelines are applicable to all banks, including the scheduled commercial banks, the public sector banks, private sector banks, the small finance bank, regional rural bank. Okay, for all the banks, these are applicable, except the banks which are payment banks. Payment banks don't give loan, therefore these guidelines are not applicable to them. Okay, and moreover, the Reserve Bank of RRBs and the small finance bank, the target is 75%. Target is 75%, whereas the target is 40% for all, 40% of NBC. Okay, and each segment also there are different things. Some of them are not there, some of them are definitely there. For example, agriculture. Agriculture advances, the minimum ANBC is required to be against
18%.
18%. And within again that there is another segment called a small farmer and marginal farmer. That small farmer,
10%.
marginal farmer is that target is
10%.
10% by some date, isn't it? Not today. 10% by 2023-24.
9%, right now.
2023-24, isn't it? As of today now, this year, how much it is? It is not, it is 9%. Okay, 9%. Okay, 8% period already crossed. Okay, now it is 9%. Okay, this year, small farmer and marginal farmer. Okay, the next is the MSME, and which is considered under MSME, that MSME includes the micro, small and medium enterprise. Micro, small and medium enterprise. And now there is no difference between service enterprise and manufacturing enterprise. Any enterprise where investment in plant and machinery or investment in equipment is not exceeding rupee 1 crore is a micro, and more than 1 crore, less than 5 crore is a small, more than 5 crore up to 10 crore is a medium. And there is not only this criteria, there is again parallel criteria is there with regard to turnover. So not more than 5 crore to consider under micro, not more than how much? 50 crore under the small, and not more than 250 crore under the medium criteria. Okay, so this is how the classification for the micro, small, and medium enterprise. There is a target not for MSME but target for micro. Target for micro is there. Again, the target for micro is how much? 7.5. Okay, 7.5. And there is a target exclusively given, benchmark exclusively provided for weaker sections, and weaker section includes the part of the priority sector, and that segments are the small farmer, micro farmer, SC/ST. There are many segments, and all put together should be compulsorily how much?
12%.
12% by 2022, 23, 23, 24. Okay, and that these are all the benchmarks. And please remember, now agriculture related part and the details we shall go, and those are agriculture. We have already discussed that 18%. Agriculture includes the farm credit. Agriculture includes the farm credit, as well as agriculture includes the other segments such as the infrastructure and ancillary activities. Farm credit, it includes the loan given to agriculture, that is a land-based farming, as well as the ancillary activities, and this put together, the individual loan given to individual farmers or loan given to corporate farmers is also included under the farm credit. There is only one element different, that when the loan given to corporate, it cannot, maximum up to rupees 2 crore is considered under priority sector advances. For example, for Venkateshwara Hatcheries, Union Bank of India has sanctioned the 40 crore loan. That 40 crore loan for the poultry is not an agriculture. Only up to 2 crore per borrowing entity can be treated here. Number two important point is loan against warehouse receipt. There is a recent change happened, and that warehouse receipt, if it is a negotiable warehouse receipt, and if it is electronically negotiable warehouse receipt, then a loan can be maximum 75 lakhs. And otherwise, if it is a non-negotiable warehouse receipt, then loan can be maximum 50 lakhs. Okay, and this loan 75 lakhs and 50 lakhs is available to individual farmer as well as the corporate farmer. With regard to agriculture infrastructure, please make a note: construction of storage house, soil conservation, tissue culture, okay, and loan for production of biofuel. These are all segment added in infrastructure, and loan up to 100 crore per borrower can be considered under agriculture advance. Ancillary activities, a loan granted to cooperative society of a farmer, then startups up to 50 crore, agri startups up to 50 crore, then food and agro processing units 100 crore, agri clinic, agri business loans and centers loan. Okay, and these aspects are considered under ancillary activities. Then when it comes to the micro, all of you know, investment criteria less than 1 crore and turnover not more than 5 crore. This is the criteria, and the loan, entire loan granted to them is a priority sector advances. Loan granted to KVI sector, irrespective of the investment in plant and machinery, are considered under micro only. Okay, and loan granted to NBFC, for the purpose of the on lending to agriculture up to 10 lakhs is only considered under priority sector advances. Okay, then export credit, there is a limit. Export credit, there is a limit. 2% of ANBC are not more than per unit more than 40 crore is only considered under the priority sector advance. Education loan not exceeding rupees 20 lakhs. Housing loan 45 lakhs and 35 lakhs. 45 lakhs. 45 lakhs is a project cost. Loan amount 35 lakhs for metro, and for other areas it is 30 lakhs and 25 lakhs. 30 lakhs is the project cost and 25 lakhs is a loan. Repairs purpose, the loan is available in a metro centers 10 lakhs and other centers 6 lakhs, and this can be included in the priority sector advances. Okay, this can be included in the priority sector advances. So the other elements such as the renewable energy, there is a recently one change, that is the bank loan up to 30 crore for the borrowers which are under the Ayushman, the projects under the renewable energy up to 30 crores can be considered. And similarly, under the Ayushman Bharat projects, which are under social infrastructure. Others it is 5 crore, whereas Ayushman Bharat health units, that is up to 10 crore, can be considered under the priority sector advances. So these are all the different segments of priority sector advances, and hope this has made you in one glance the clarity about the different kind of targets and sub targets in entire priority sector advances. Okay, and I think thereafter 2-3 important things for exam point of view. Remember, on lending to NBFCs for agriculture purpose, not more than 10 lakhs. For micro and small enterprises, not more than 20 lakhs per borrower if they are granting. And for housing also, not more than 20 lakhs per borrower. Okay, that's the way. On lending means lending given to, money given to NBFCs who are engaged in this activity, then only it is considered as priority sector advances. As far as government sponsored schemes, okay, there is a PMEGP, PMMY, NRLM, NULM. Important schemes, that only you go with that. Mudra Yojana, all of you know, Shishu, Kishore, Tarun. I don't want to spend my time on that. Okay, and almost PMMY, NRLM, NULM, all the loans are the collateral free loan. SHG under NRLM, how much is the collateral free loan? SHG under NRLM, how much is the collateral free? 20 lakhs. 20 lakhs. Okay, 20 lakhs. And there are agriculture insurance. Okay, that agriculture insurance part, please make a note. Personal accident insurance part, that please make a note. Exam question may come. And now I think we are nearing the final part, that is Forex. We will discuss what is the foreign exchange part. The foreign exchange, there are
UGC.
Hello,
KCC and UGC in this.
okay, you want to talk me. Okay, KCC is nothing but Kisan credit card, and Kisan credit card is a loan given to agriculturist for the purpose of the production credit. Means whatever money he is requiring for the purpose of raising the crop, that is making the land ready, seed, then fertilizers and the labor, that entire part which he is investing on the land for cultivating the crops is a money. And similarly, there is a production credit for the other ancillary activities also, like poultry. For all them, whatever money we are granting to farmer is known as the Kisan credit card. Okay, Kisan credit card. And that Kisan credit card is nothing but the amount is predetermined on the basis of scale of finance. Scale of finance is decided by whom? Scale of finance per acre is decided by district level technical committee. District level technical committee that is taking decision in each one of the district. It is not SLBC. Okay, it is district level technical committee takes a call which are all the crops in the district and what could be the scale of finance per acre finance. Therefore, there is no margin. Whatever scale of finance that is taken, then plus thereafter the 10% is 20% is added towards the personal consumption. Okay, then 10% is added for contingencies. Every year additional 10%. For 5-year period, the limit can be considered sanctioned, assuming the 20% increase every year. That's the way 5-year limit can be considered. And the no need to bother about the documentation part. Every year DBC can be obtained. Only when the limit gets changed, then only a fresh set of documentation, or at the end of the 5-year, a fresh set of documentation can be carried. I hope in one go, I have tried to explain you the Kisan credit card. Okay, or Union Green Card.
Sir, maximum how much loan can be given to agriculture sector?
Any amount you can give as per their entitlement. But to a corporate, as per their entitlement. For the purpose of classification under priority sector advance agriculture, only corporates maximum 2 crore, for individual any amount.
Thank you, sir.
Is it clear?
Sir, is there necessary to take new land possession certificate and
Land? सी देखिए, हमें लोन किसको देना है? हम चाहे तो लोन फार्मर को दे सकते हैं, चाहे तो लोन लीज होल्डर को दे सकते हैं, टेनेंट फार्मर को दे सकते हैं, JLG को दे सकते हैं, SHG को दे सकते हैं. ओके, सो लोन किसे देंगे? जो खेती कर रहा है. ओके वो खेती कर रहा है, इसका कोई भी हमारे पास एविडेंस है, that itself is more than sufficient, because document specification is as per the practice prevailing in respective. But as far as common documentation concerned, there is no such document which insists for you must obtain the possession certificate. Who gives that possession certificate?
Education loan for abroad and coming under priority sector.
Yeah, only 20 lakhs, whether it is abroad, whether it is domestic. Amount can be given any amount. Okay, don't worry about the amount
Can
of
we
loan.
continue with the next topic, please?
That is what I am planning. Okay, we should not spend more time on the area. That importance of priority sector is that much. Okay, then let us talk something about the Forex. Okay, and in the Forex this session, we will not talk everything. We are just touching the very important points, such as the what is Forex, who governs the Forex, then what is exchange rate, what are all the correspondent account, what are all the current account, capital account, then who are all the authorized persons. Okay. Then different type of contracts, cash, term, spot, forward, then TT buying, TT selling, bill buying, then remittance facilities, and important features of import and export, as well as few important features of the liability products, such as deposit accounts, which are offered under Forex category, that is NR accounts, NRO account, NRE account, FCNR account, RFC account, EFC account, and SNRR account. So these are all the accounts which we would like to discuss upon. So as far as Forex concerned, what is Forex? Forex is nothing but the foreign currency, foreign traveler checks. Okay, any bill which is denominated in foreign currency is considered as foreign exchange as per section 2D of Foreign Exchange Management Act. Foreign Exchange Management Act is the act which governs the entire foreign exchange activity in a country. And as you all aware, that country cannot be self-reliant in all respects. Country need to export the surplus, country need to get what it requires, and as a result there is always a trade requirement with other countries, and other countries cannot produce the Indian rupees and we cannot produce the US dollar. So as a result there is always a need for exchange, and therefore exchanging one currency with another currency is also treated as foreign exchange. Exchanging one currency with another currency is also treated as foreign exchange. And for the purpose, there are authorized people in the country, and as per the FEMA, Reserve Bank of India is the authority which governs the foreign exchange guidelines, and under that it licenses the people to carry out this activity. And the people who are eligible to carry out this activity are known as authorized persons, AD category 1, AD category 2, select financial institutions, and FFMCs. There are 4 different category of people are allowed to transact in foreign exchange. And AD category 1 people are permitted to carry out all current account and capital account transactions. AD category 2 people are permitted only to take up non-trade current account transactions, and select financial institutions are permitted to take only the transactions which are incidental to their activity, and full-fledged money changers are permitted only for purchase of foreign currency or sale of foreign currency for private or personal visits. This is what a private or visits or business visits. This is what a categorization. And thereafter further categorization is that A category, B category, C category, branch, but AD category is permitted by Reserve Bank of India, and Union Bank of India comes under the AD category 1 bank. Okay, and in order to maintain the transactions in foreign currency, bank required to maintain an account abroad. And when Union Bank of India cannot place Delhi, is maintaining an account with Citibank New York, then such an account is called as Nostro account. And if Citibank New York is maintaining a rupee account with our MS Mark Mumbai, then it is known as Vostro account. Then if any other bank is referring either this Nostro or Vostro account, then it is known as, they refer it as Loro account. So Nostro, Vostro, Loro is a terminology referred for the purpose of considering the account. Okay, Union Bank of India, MSM Mumbai is maintaining an account in foreign currency with Citibank New York, then it is a Nostro account. That bank is maintaining a rupee account with us, then we call it as a your Vostro account. Then otherwise, we earlier for that, our Nostro account, your Vostro account, and their nostro account, their loro account. Okay, that's the way it goes. So correspondent accounts are nostro, ostro, loro. Then there is all authorized dealers or authorized dealers are required to submit their transaction details, buying and selling of foreign currency, to RBI, and that statement is known as R return. That statement is known as R return, and that required to be submitted on every 15 days, fortnightly, 15th and last day of the month. Okay, 15th and last day of the month. Then there are the transactions which are undertaken under the foreign exchange, maybe based on the contract entered versus the delivery obtained or delivery given. So that's the way transactions are deferred. It may be a cash transaction, term transaction, spot transaction, or forward transaction. Cash transaction is one where transaction of buying or selling of foreign currency is undertaken today, as well as delivery of foreign currency or the obtaining foreign currency, both are being undertaken on the same day. That is a cash transaction. Whereas term transaction is contract is entered today, but delivery of foreign currency is happening only on the next working day. That is a term transaction. Spot transaction is where there is a 2 working days. Second working day, the bank is obtaining the foreign currency. That is a spot transaction. And the forward is any day after the 2 working day, a foreign currency is obtained, whereas transaction, that is a contract, is entered today. That is a forward transaction. So these are different transactions which are being undertaken by people depending upon the amount of foreign currency which they are receiving or to be receiving or likely to receive. Based on that, these transactions are undertaken. Okay, and the any rate, the rate.
So can you please explain forward contracts?
Oh, forward contract is a contract. For example, my exporter, Union Bank of India, has got an account of an exporter who is likely to receive foreign currency because he has already made the goods ready. He is likely to make the shipment on 15th of the February. 15th of February, he will ship, so that the goods will be passed on to another country, and the document related to that he will make ready by 20th. On 20th, he is likely to present a bill. 20th February, he is presenting the bill of 1 lakh US dollar. This is what is the exporter requirement. And today he knows. So he comes to the bank and tells that, sir, on 20th, I am surrendering, I'm giving you a bill of 1 lakh. Will you please book a contract for that? And now bank books a contract. Now today is the contract made. When we are getting the foreign currency, we are likely to get a foreign currency not on 20th February. That 20th February only bill will come. Then that bill will go to USA. Then it will be presented there, and from that he will be accepting and making the payment. So that's the way that period and the February 20th put together is the period which is lagging, and that is a forward period. I hope you understood this. Is it clear? Is it clear? Shall I move further?
Yes, sir.
Yes, sir. Yes, sir.
Yeah.
Yes, sir.
And any transaction when bank is getting foreign currency is a buying transaction, and when bank is parting foreign currency is a selling transaction. Please understand, no more confusion. Very simple is bank acquiring foreign currency is a buying transaction. Bank parting foreign currency is a sale transaction. And we are considering buy or sale in terms of only foreign currency. You should not get confused. For a customer, it is a buy transaction. Please understand, it is you are quoting the rate to the customer. Therefore, whether you quote a buying rate, whether you quote a selling rate. If it is a buying transaction, you quote a buying rate. If it is a selling transaction, you quote a selling rate. That simple it is. Is it clear? Is it clear? So,
Yes, sir.
So normally there is a two-way quotation. That is what one of the important feature of the international banking, foreign exchange. Two-way quote. Two-way quote means $1 US is equal to 75.40, 75.35, 75.40. 75.35, 75.40. Both rates are mentioned here. It means what? That in $1 US, 75.35 means that particular bank which is quoting this rate is ready to acquire foreign currency, that US dollar, at 75 rupees 35 paisa. But if you want foreign currency, if you want dollar from that bank, it is ready to give only at 75.40. That simple it is again foreign exchange. Okay. So
Yes,
buying
sir.
rate and selling rate. And this is the rate quoted by someone. And another point which normally people get confused is when we quote, this is a buying rate, that is a selling rate. But our rates are quoted in a different way, that is TT buying, TT selling, bill buying, bill selling. Okay, what is that? Please understand, these rates what we are talking are the interbank rates. Interbank rate means, for example, US dollar 1 lakh is Union Bank of India likely to get. What Union Bank of India will do with that? It can't do anything. Please understand, for Union Bank of India, whether it is dollar, whether it is sterling pound, whether it is damn any currency, it is of zero value. So immediately it wants to dispose, because for them it has got no meaning at all except for earning the exchange. That is what only Union Bank interest. So what Union Bank of India is doing now, if someone is coming and telling that they will be giving you bill of 1 lakh, means Union Bank of India's nostro account is likely to get 1 lakh. So based on that commitment, Union Bank of India is asking another bank or any other banker, what is the quote for the foreign currency on for that particular day? Then whatever rate they are quoting, from that rate I am either deducting my margin or adding my margin. And that's the way I am finally quoting rate to the customer. Finally quoting rate to the customer. That margin is my profit, not premium or not discount. Premium and discount are added based on the forward or a spot. If it is a spot rate, no premium, no discount. But if it is a forward, for the forward period, currency may be costly, currency may be cheaper. If currency is costly, then it is considered as premium. Currency is cheap, then it is considered currency is at discount. So discount get deducted, premium gets added. That's okay.
So there is one little confusion that you
Yeah.
said that when a bank gets some currency like foreign exchange, it has nothing to do, and they are readily seeking for getting an exchange for it. That is the
Yeah.
exchange they are earning. But when the bank is financing on LIBOR-based rates, that is the FCLs, then these foreign currencies may be utilized, or how else the bank then procure the FCLs in that case.
Okay. See, you are not procuring for yourself. Whatever you are doing for your client. And that client is earning foreign currency. That client is in need of foreign currency. And that client will earn foreign currency and make the loan clear. It is not the bank. For the sake of my client, I am arranging that. That is the only thing I am doing. Okay. And for that purpose, there is a rate of interest charge, and that rate of interest, additional rate of interest, what you are charging is your income. Similarly, in the foreign currency, when I am earning, it is of no use to me. What I'm doing, I'm first of all seeing anybody is ready to buy, and whatever rate they are quoting, I'm just making margin out of that and making my money. So a rate difference which is quoted by the bank, that is 75.40, 75.35, that 5 paisa is a spread. Whereas finally, what rate I am quoting to my customer is 75.35 minus 0.05, 75.30. That is that 0.05 is my margin, my exchange margin. Is it clear?
Yes, sir.
Is it clear? And the rate may be quoted in a direct way, rate may be quoted in an indirect way. Rate when US dollar 1 is equal to 71.50, that is 1 US dollar remain constant. Any change in the rate is denominated in rupee, then it is a direct rate. If it is otherwise, that is rupee 100 is equal to 1.2135, then it is a indirect rate. Okay, indirect rate. And now India, we have adopted for direct rate quotation right from 1993 onwards. Okay. So these are all the with regard to exchange rate mechanism. TT buying, bill buying, TT selling, bill selling is nothing but the TT buying is a transaction where your nostro account is either got credited or otherwise to be getting credited not more than spot time. That is a 2 days time. Within 2 days, your nostro account is likely to get credit, or your nostro account is already got credited. Then in such a scenario, the rate which you quote to customer is a TT buying rate. TT buying rate is nothing but interbank buying rate minus your margin. That is the TT buying rate. What is the bill buying rate? Bill buying rate is any bill for that matter. There is always a transit period involved, and there is a usance period involved. A usance period or transit period, when it gets involved, then automatically it becomes a forward. So usance period, you either add margin, add premium, deduct discount, arrive at the forward rate, and then deduct margin in case if it is buying. So that's the way it is a bill buying rate. Even a purchase of check, a check issued, check in foreign currency, customer is presenting and you are purchasing that check. See, a check is a simple thing. Purchase means you are now sending that check to that particular bank to credit your Nostro account. Now, definitely there is a minimum 5-day period is involved. No, check to go to USA and then let it be in the banker's hand. Minimum 5 days are being required, and therefore more than 2 days, automatically a check purchase or DD purchase involves a bill buying rate. TT selling is nothing but parting foreign currency instantly. Okay, and without scrutiny of any document, any bill, is a TT selling rate. Whereas TT selling rate, how it is calculated? Spot selling, add margin. Spot selling, add margin, TT selling rate. Bill selling rate is wherever bank is involved in scrutiny of document, then the spot selling, that is TT selling rate, plus add margin for bill selling, then it is a double margin get added, spot selling as well as TT selling, and that becomes a bill selling, because in both the cases foreign currency is parted instantly. In addition to this, there are special rates for traveler check buying, traveler check selling, currency buying, and currency selling. Okay, I think time is up. Okay, that's the reason there is a call. Hello. आप सुन रहे हो ना? बाद में पूछ लेना, ठीक है? बाद में पूछ लेना. हाँ, आप बाद में पूछ लो. मैं क्योंकि क्लास चल रहा है अभी, अपने को ऑलरेडी टाइम नहीं है. ओके, जल्दी खत्म कर. सॉरी. हाँ, I'm sorry, one of the participant, he is not able to ask questions, therefore he has raised a question over the phone. I told him that whatever questions are there, reserve the questions, you can ask me at any point of time afterwards. Okay. क्या करेंगे सर, क्योंकि हमारे पास समय की बड़ी कमी है, कम समय में ज्यादा से ज्यादा बातें कवर करनी हो तो हमें किसी न किसी को तो नाराज करना ही होता है. ओके, तो ये नहीं, चलो चलता है. क्या करते, बच्चे अपने ही हैं, अपने ही लोग हैं. हम बड़े हैं, हम थोड़े सीनियर हो गए, हमारे में उतनी सहन शक्ति होनी चाहिए, हम उनको कामली ही डील करें. अब नेक्स्ट बात आती है फेडाई की. व्हाट इज द फेडाई? फॉरेन एक्सचेंज डीलर एसोसिएशन. इट इज एन ऑर्गेनाइजेशन which is registered as a society, which is association of all the foreign exchange dealers, and they put together uniform rules they form, and under those rules there are few important rules. I'll tell, not all the rules. Number one, a notional transit period, means a bill is sent from one India to some other country, then how much is the transit period we must consider, and the notional transit period for the purpose of calculation of rate is treated as 25 days. Any export bill, whether it is purchased, discounted or negotiated, it can be crystallized, means cancellation or the reversal need to be done only at a TT selling rate. Any cancellation of forward contract, any forward contract is cancelled, it must be done at opposite TT rate. So these are all the few rules which are prescribed by FEDAI, and FEDAI gives rules with regard to various other aspects, including the hours of banking, which day is considered as holiday, etc., etc. Then there is an organization called SWIFT. SWIFT is Society for Worldwide Interbank Financial Telecommunication. It is a society established in Brussels. It is only a communication platform like our SFMS. They don't undertake any payment. Okay, they only are passing on the structured financial messaging system like absolutely secured messaging. Another word for the purpose of this examination you have to remember, now not necessarily you must quote or you must get a rate in terms of LIBOR. You can now have a alternate reference rates, and alternate reference rates according to the currency, they are different. For example, US, there is a soft. For Euro, there is a Euro STR. For Switzerland, francs, there is a Saron. For UK, there is a LIBOR. For Japan, there is a tonar. That is, for UK, there is a Sonia. For Japan, there is a tonar. Like that, different rates are being there. They are called as alternate reference rates. Very, very important exam point of view. Liberalized remittance scheme for resident individuals. That is, as far as today's concern, all the remittances from our country to abroad, okay, can be made for all permitted capital account and the all current account transactions. The permitted capital account and current account transaction maximum remittance is allowed is only $250,000 by the bank without referring matter to Reserve Bank of India. Okay, means what? There can be remittance more than $250,000 per annum when there is a Reserve Bank of India permits. Without even Reserve Bank of India permission also, bank can undertake this. So what are all the capital account transactions? Opening a foreign currency account abroad, purchasing property abroad, making investment abroad. So these are all the activities which are considered under capital account, whereas current account transactions are visit abroad, gifting money to abroad person, going there for employment purpose and spending money in that connection. Okay, maintaining close relative abroad, business purpose travel, study purpose, medical treatment purpose, or any other current account transaction. Okay, it is 250,000 per annum. And in the process, at any point of time, there any transaction more than $25,000 for a current account transaction, more than $25,000 current account transaction, PAN is compulsory. Okay, and close relative for this purpose is as per the Companies Law 2013. A person, while demanding the foreign currency, he can get only foreign currency in the form of the currency not more than $3,000, except for Iraq, Libya, and the USSR few states. And for all those states, it is $5,000. Rest of the money he can take in the form of traveler checks or DD. Okay, Indian rupee he can take abroad not more than 25,000. Not more than 25,000. Okay, and the Nepal and Bhutan, since their rupee works, therefore the there is below 100 rupee, any amount of currency can be taken, but above 100 rupee notes not more than 25,000. Okay, then inward remittance in the same way. How much can be? Any amount of foreign currency can be brought into India, but anybody who is bringing in India more than 5,000 in terms of foreign currency or more than 10,000 in the form of traveler checks, he has to declare with the custom declaration form that he got this currency and he is coming back. In case a person is having an unspent foreign currency with him, he can retain up for 180 days on arrival. Okay, and resident individual can retain up to $2,000, and he can retain up to any amount of coins. Okay, when I say $2,000 means any currency equivalent to $2,000. Okay, Indian rupee can be brought only up to rupees 25,000. Okay, so and any FFMC is permitted to take a transaction not more than $3,000. Export credit and import credit, I think there are 2-3 important things I'll tell. That every exporter or importer, he need to have an export import number, and exporter gets 2 type of credit. That is a packing credit for making the goods ready for export, and after goods are ready, he gets a post shipment finance, and that is a bill finance. And majority of the cases, post shipment finance is under letter of credit. So under that he gets, okay, and therefore that bill is either purchased, negotiated, or discounted, money is parted. And for this purpose, there is a ECGC guarantee is obtained by the bank. Okay, ECGC guarantee is obtained by the bank. And then there are various other aspects of relating to foreign trade. I will not enter into that, but let us talk something about which are all the liability products on the foreign exchange side. One is a NR account. NR accounts can be NRE account, NRO account in the form of rupee, and FCNR account in the form of foreign currency. Now, all these 3 accounts are eligible to be open only by non-resident Indian or person of Indian origin. Person of Indian origin. And these accounts can be opened jointly. Okay, all these accounts can be opened jointly with a non-resident and resident. Resident and non-resident can be there, but resident must be a close relative when it comes to the NRE account and FCNR account. And that too, the account should be in the form of farmer or survivor. Okay, in the form of a farmer or survivor. Okay, and repatriation means money is going back that from India. With regard to NRE account, FCNR account permitted, because both these accounts, money is received only from foreign country. Whereas NRO account is an account of a non-resident Indian who is earlier maintaining an account, or otherwise he has started maintaining an account for the purpose of local receipts and local payments. So these are few things I thought I'll talk to you with regard to NRE, NRO, FCNR. And there is an RFC account. RFC account is a resident foreign currency account. When NR person comes back and settles in India, he can bring his foreign currency, whatever he got, or otherwise he can convert foreign currency FCNR account and maintain that balance in resident foreign currency account, because he is converted as himself as a resident. He is not a non-resident anymore. Okay. And there is a possibility of RFC domestic. Person like me, when I visit abroad and I earn foreign currency there, I can come and very proudly maintain a foreign currency account, that is RFC domestic account. Okay. EFC is another account which is anybody who is earning foreign currency, he can maintain the account, and this account is only a non-interest bearing current account. Okay. Then there is a SNRR account. SNRR account is an account opened by a non-resident, a non-resident who is opening this account only for his purpose. A person who is visiting India, for tourist purpose, he can also open an NRO account. Okay, a person who is coming as a student, a studies person, okay, who is foreigner who is coming here in India for studies, he can also open a NRO account. Okay, and for up to a period of 30 days, he can open an account without even having a residence proof. Okay, and till that time, he is not permitted to transact more than $10,000 from his account. So there are few things I thought I'll talk to you with regard to the for foreign exchange part. And then in addition to this, there is a credit monitoring and few important things I'll spell upon. Okay. One is a monitoring report. All of you know, 50 lakhs and above, compulsory reporting is required to be done. There is a CRILC. CRILC reporting is for SMA account. What is SMA account? SMA 0, SMA 1, SMA 2, I don't dwell upon. But CRILC is a reporting, that is a central repository for information on large credit. And that repository, we have to intimate any account which is categorized under SMA 5 crore and above. Any account under 5 crore and above. And any account where there is an element of what you can say, the non-cooperation in the way that the customer is thwarting the all efforts of the bank with regard to recovery inspection, book debt inspection, or stock audit, then customer is not allowing to make happen, then such customers are to be classified under non-cooperative, and these accounts are 5 crore and above. And any account there is a suspicious element, means a fraud element is anticipated, and outstanding is more than 50 crore, then these accounts are under red flag account, and these red flag accounts are required to be reported to Reserve Bank of India under CRILC. Okay, under CRILC. And CRILC is a repository maintained by Reserve Bank of India, which is accessible to all the banks, so that once an account is intimated there, the other bank supposed to not to fund these accounts which are reported under CRILC. Okay. Then any account which is reported under red flag account, there must be a forensic audit carried out. Okay, forensic audit is the audit which is trying to look into the transactions, why this problem has occurred. Okay, then there is a IBC Code, Insolvency and Bankruptcy Code 2016, and there are 4 important things I just wanted to talk about that. Under this, there are 4 pillars. One is adjudicating authority, then there is a insolvency professional, then there is a what you can say, resolution authority. Okay, then there are the people who can approach under IBC Code. So please understand, NCLT is adjudicating authority for LLP and corporate. For firms and individuals, there is a DRT. Okay, and 1 crore and above is an amount to be considered there. And anybody who is who wants an item to be referred to IBC for the purpose of insolvency resolution, if it is a individual bank and 1 borrower account, the bank itself can take care of it. Employees also can go to IBC Code. Even the company also can go to the resolution process. He can make application to NCLT. Okay, and then whenever bankers are going and there is a consortium, 75% by value, 60% by number, they must take a decision to go ahead. And if they are approaching that there is a insolvency application against the person, then there is a process. Once the application is admitted in the NCLT, then there is a 180 days moratorium, which can be extended by 90 days. And thereafter 60 days for making that resolution process get completed. As a result, 330 days are made available. For small companies, it is 135 days. And once the matter is proceeded to matter is accepted under NCLT, then there is a committee of creditors gets appointed by insolvency professional, and there is a information utilities are there. Those people provide the information which is required for the insolvency resolution professionals to carry out the activity, and this committee of creditors takes a call what way it can be resolved. And once they have decided, then that resolution plan is submitted to NCLT. NCLT takes a call and the resolution process gets completed. If any one of the bank or the company is not happy with the NCLT's decision, there can be appeal, and appeal can be made to NCLAT, National Company Law Appellate Tribunal. And if there is no happy with the NCLAT decision, also the one can approach to Supreme Court. Okay, so these are all the, and then there is another way resolution is restructuring of accounts. Prudential guidelines are there by the bank. There is a PRIP, PPRIP. What is pre-package resolution insolvency plan? Okay, that is a PRIP. PRIP is nothing but instead of going through all this process, bank and customer, both of them are agreeing together, and that package is submitted to NCLT and gets approved. That is a PRIP. Okay, lookout circular I have already told. NCLT is the adjudicating authority. ARCs are the companies, asset reconstruction companies, which involve in the process of resolution or the sale of the company's assets. Then IRAC guidelines, I don't think I need to talk, but there are few things I just wanted to talk. Once an account becomes NPA, bank's concern is to get the money back. There is a SARFAESI, DRT, Lok Adalat. SARFAESI, any loan account NPA more than 1 lakh, amount of outstanding is not more than 20%, and there is a security available which is duly registered with SERSAI, then only we can initiate action under SARFAESI section under section 12. Okay, we have to serve a notice, and that notice is for a period of 60 days.
13.2, sir. 13.2.
Sorry, 13.2. 13.2, you have to serve the notice, and that 60 days notice, once it is served, thereafter the customer has got an option to either appeal against the banker's decision, and they have to go to DRT within 45 days. Within 45 days, DRT may entertain their claim or may not entertain. That's up to the DRT. In case they are not happy, then they can also go to the DRAT. Okay, that is what one side. But if DRT is not admitting, they are not approaching, they are agreeing with the contention of the bank, still they can make an objection to the bank. Bank need to reply to the customer within 15 days. Okay, this is what is all about the SARFAESI. The bank, thereafter the process is bank need to take the possession of the property, and after the taking possession, it has to declare to the external world that this property is under possession and they are planning for sale. That is sale notice. Again, there is a 30 days period need to be provided for, and sale can happen by inviting bids. Okay, or otherwise there is also a possibility of private sale. Okay, so this is what all about. Few things: gross NPA, net NPA, please remember. Okay, and there is a provisioning norms. Exam point of view, DRT is for all accounts outstanding more than 20 lakhs, and above. Okay, including your interest. Then Lok Adalat is nothing but whatever your compromise proposals are getting authenticated by that particular court, or sometimes court invites for people to come and resolve their matter. That is the Lok Adalat, and there the matters more than how much?
20 lakhs, sir.
20 lakhs. Okay, matters up to only 20 lakhs are settled there. Okay, and please note, the Lok Adalat is only a process where your resolution already resolved get settled, and for DRT implemented Lok Adalat, that 20 lakhs limit is also not there. Okay, so these are all the few things, and you may get questions relating to the official language policy. You may get few questions on RTI. Okay, RTI related questions. There are few questions which are absolutely relating to very recent developments, such as National Bank for Financing Infrastructure and Development, and there is a on tap special long-term repo operations. Okay, Then there is a electronic gold receipt question. Okay, then scale-based regulation for NBFCs. Okay, and these kind of some recent developments also you can take a count. Okay, with this, I think I have come to an end. Even account aggregator is another term which is making a round nowadays. So there is a possibility. Okay, account aggregators are the new concept that the account related information can be aggregated and shared with the consent of the person to others. That is the account aggregator concept. Okay, and if you are willing, I can run through a very quick MCQs if you are willing. Okay,
Yes.
and I hope
Yes,
you are
sir.
that very quick, huh? I
Yes,
don't
yes,
want to
sir.
spend time, and I hope
Yes, sir.
okay, very quick. Chalo. So questions. You have seen the question? Hello.
Guarantee.
Yes, sir. Yes, sir.
Answer
D.
it done. Okay. Don't
D,
tell
D,
me.
D,
Yeah,
D.
don't tell me the answer. Okay. You just make the answer, and if it is correct, it is well, good, fine. Okay. I'm just moving very fast. Question number 2.
B. B.
B.
Sir, A.
B.
B.
NCLT.
Okay. NCLT, because LLP is there. Okay. If it is a
अभी तो
partnership firm,
बताया सर ने.
if it is a partnership firm, then it is a DRT.
DRT.
Okay. The full form of FALCR. What is yesterday I discussed with you?
C, sir.
See, as
C.
you know that Basel III, there is an introduction of liquidity coverage ratio, and many banks are failing with regard to maintenance of that. So Reserve Bank of India started a facility for making that particular gap made available through FALCR. Okay.
Liquidity.
Then
Liquid coverage.
minimum external credit rating required for implementation of restructuring under prudential framework. This is an important question. Exam point of view, it is RP4. 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 Okay. RP1 is considered to be the RP1 considered to be the
Lowest risk.
lowest risk, and RP7 is considered to be the highest risk.
Highest.
Okay.
Highest rating.
Okay. Highest risk, not highest rating. Okay. RP7 is the highest risk with regard to resolution. Okay. The RBI has introduced a scheme to provide retail investors. Which is the answer?
Security.
Security.
So question is not about the account. Question is about what is that platform. Platform is known as retail direct.
Retail direct.
Reserve Bank of India's deadline for compliance of guidelines for recurring online credit transactions.
31/3/2022, sir.
31/9/2021.
39/21.
The amount that can be loaded in a semi-closed prepaid payment instrument.
50,000, 1 lakh and 10. 10,000 or 1 lakh.
10,000 and 1 lakh. Very good. Very good.
D.
Lock-in period for invocation of CGT MSC guarantee by bank.
18 महीने.
18 महीने. कौन सा 18 3 जगह है.
From the date of disbursement.
From the date of the disbursement.
और ऐसा कोई जरूरी नहीं है, उसके साथ दूसरी भी लिंक है. वो गारंटी कवर कब से स्टार्ट हो रहा है. तो सी, whichever is latter. Question number 9. Balance in the small account. 50,000. 50,000. Escrow account is. फटाफट.
Our bank account is foreign currency.
B, sir.
B.
Guarantee scheme which provides guarantee for loans under Stand Up India.
CHSL.
A.
Good. Complaint of sexual harassment should be filed within
3 months.
3 months. Very good. As per whistleblower policy, upon receipt of a complaint, letter is to be sent to complainant to obtain confirmation.
30 days from the date of receipt.
30
days.
3 months from the date of receipt of the commission's letter. Minimum and maximum number of partners in an LLP.
Minimum 2, maximum unlimited.
No limited.
Maximum no limit. Very good.
No limit.
Cross-border wire transfer. Cross-border wire transfer report.
5 lakh.
Okay, 5 lakh. Again,
सर सी सबसे
three
बड़ा है,
places 5 lakhs.
सी ऑप्शन सबसे लंबा है, यही होगा।
Only non-FCR entities ऐसा कोई नहीं है, all cross border wire transfers. नंबर ये है, इसलिए गेस वर्क नहीं चलेगा, पढ़ के करो. Garnish order is applicable for what amount if the amount is not mentioned in the order?
Entire balance.
Entire balance, sir.
Entire balance in the account, but not applicable to money deposited subsequent to receipt.
Subsequently, see,
Maximum amount of Indian currency and foreign currency that a traveler can carry abroad, other than Iraq, Libya, Islamic Republic.
25,000
25,000 and 3,000. E answer.
Unused foreign currency above what amount should be surrendered by a person returning from India?
B
In
answer.
how many days?
B.
B, sir, B, correct.
B. Monetary Policy Committee constituted by central government under which act?
Section
45 ZB.
Under which act RBI issues direction to banks on selective credit control?
Section 35 banking regulation.
अरे नहीं यार, ये तो selective credit control का section 21 के अंदर आता है. Section 21 of BR Act.
BR Act.
Banking Regulation Act shall not apply to.
Both A, B, C, sir.
Both A and B.
Any person resident in India who had gone out of India on temporary visit may bring into India at any time his return.
25,000 rupees.
25,000.
25,000. C.
Which type of LC are generally used as a substitute for performance guarantee?
Standby.
Standby. Very good. Very good.
Standby.
What is the agency commission payable to bank on government pension?
75 rupees.
75
rupees.
75.
What is the maximum investment in a financial year?
Yeah, 4 kg and 20 kg.
What is the maximum amount of loan that can be sanctioned against senior citizen deposit?
50%, sir.
No loan. Up to what period deposit can be made in Sukanya Samriddhi?
15 साल.
15 साल.
Completion of 15 years from the date of opening an account. As per the latest priority sector guidelines, what is the higher weight to be assigned, risk weight to be assigned for incremental priority credit in the identified districts where the credit flow is comparatively low?
125%.
Very good. Bank shall reverse the amount involved in the unauthorized electronic transaction to the customer's account within
B.
5 calendar days.
10 calendar days.
days.
And that too without waiting for settlement of any insurance claim. If it is not possible to credit NEFT transaction to the account of the beneficiary, fatak se
2
hours.
2 plus 2, that is 2 hours
2
only. Okay.
2 plus 2.
Bank may insist for deposit of rupees dash from the customer who would like to get the locker allotted.
3 years of rent plus brokerage charges of equivalent, sir.
D, sir.
D. Answer is D, sir.
Amount equal to 3 plus rent.
With regard to collateral security need to be insisted upon for loans.
सर लास्ट का आंसर क्या था सर? लास्ट का आंसर
देखो, लास्ट का आंसर डार्क करके रखा है, देखो D.
Amount equal to 3 years.
Then with regard to collateral security need not be insisted upon for loans. Which of the following is incorrect?
सर 4 गलत है.
4 गलत है. Only 1, 3.
1, 2, 3 सही है.
Only 4 गलत है, सर. बाकी
क्यों
सब
गलत है?
सही है. और एजुकेशन लोन के लिए
all the correct.
All correct है. All correct.
All are correct. तो इसका आंसर क्या है? None is incorrect.
None is incorrect.
As per the revised guidelines, the small enterprise is 1.
10 crore, 50 crore.
पता नहीं, मेरे को आंसर बताओ. आप आंसर वैसे बताओ.
B.
10 CR.
B.
As per loan policy of the bank, benchmark TOL TNW ratio for trader is
5:1 minimum.
5:1.
Maximum
4:1.
not minimum, maximum.
Maximum 5.
Maximum 5.
Maximum.
Maximum. B.
Long term sources are 1200, fixed assets are 1000, current assets are 600. Net working capital and current ratios are
D.
चलो मैं ज्यादा समय नहीं लेता हूँ, फर्स्ट आंसर बता देता हूँ आपको। आंसर इज
ये आंसर है सर, ये 402
200 प्लस 1.50। ओके, अब घर में आराम से रात में बैठ के कैलकुलेट करना, कल आपको नहीं आता है तो कल हमको पूछ लेना, हम आपको बता देंगे। ओके, सेक्शन 140 ऑफ नेगोशिएबल इंस्ट्रूमेंट एक्ट deliberates about. Section 140 of Instrument Act deliberates about no excuse available to the drawer from prosecution. He had no reason to believe that he issued a check without that he was not knowing that check will be dishonored. That excuse is not available as per section 140. Then profit before tax is 120, tax is 20, depreciation is 50, interest on term loan is 50, installment on term loan is 75. What is the data? With this data, can you calculate DSCR?
Sir, please repeat the answer of question number 37.
I'll repeat it. Here is the answer. Okay. I'll show again the question number 38.
Sir. Thank you, sir.
PBT is 120, tax is rupees 20, depreciation 50, interest on term loan 50, installment 75. Can you calculate? Yes, you can calculate. That is 1.60. Answer is here. Explanation is here. Okay. Then, as per loan policy of the bank, takeover code stipulates which of the following incorrect. Arey yaar, don't mark something on my screen. It creates problem. Yeah. As per loan policy of the bank, takeover code stipulates which of the following is incorrect.
E, all are correct, sir.
4.
correct, sir. All correct, sir.
All are correct. Minimum average balance. Okay, your average monthly balance in UCCA 1.
50,000.
Your answer, I don't know. Under policy on value dating of transaction, value dated transactions for general accounts are permitted in FINACL at the branch level for a period of
7 days.
14 days. 14 days.
14 days. Okay.
7 days.
14 days. आप चाहे तो एक काम करना, ये आपके यूनियन बैंक ऑफ इंडिया के जो क्वेश्चन है 2500, उसमें 211 नंबर का सवाल है, जवाब आप ढूंढ लेना, क्योंकि इस बहाने तो कम से कम आप वो सवाल को देखोगे। रिगार्डिंग डीम्ड ओवीडी फॉर लिमिटेड पर्पस,
2500 सर।
क्वेश्चन नंबर 211।
नहीं, वो पीडीएफ जो आप बता रहे हैं
वही बता रहा हूं मैं आपको। 2500 का क्वेश्चन है ना, कई सारे MCQs।
अरे सर, उनको पढ़ते पढ़ते तो 2026
नहीं, इसलिए मत पढ़ो आप उसको, केवल 211 वाला सवाल पढ़ लो। ओके, 178 वाला सवाल है वो रिगार्डिंग डीम्ड ओवीडी। इसका जवाब क्या है? इसका जवाब बड़ा सिंपल है। यूटिलिटी बिल विच इज मोर देन 2 months old cannot be considered as the OVD for the residence purpose. In case of a failed digital transaction, reversal of transaction will be done by who does it?
Department, digital banking department.
Digital banking, yeah.
A maximum ceiling of rupees dash was fixed for the benefit of additional rate 1%. कितना अमाउंट तक के डिपॉजिट
5 करोड़
आप
5 करोड़
5 करोड़
स्टाफ के लोन को, स्टाफ के डिपॉजिट को कितना अमाउंट रखोगे आप?
Now 500 lakhs.
5 crore, sir. 500
5
lakhs.
crore 2
As
crore
per the policy of staff deposit, a retired member of the bank staff not include. इनमें से कौन इंक्लूड नहीं होगा उसके अंदर?
सर 43, 44 का जो आंसर है ना, उसको थोड़ा बोल्ड कर दीजिए ना प्लीज।
नहीं, उसमें आंसर मेरे पास है ही नहीं, तो मैं क्या बोल्ड करूं उसको? तो आपको आंसर चेक करने हैं। क्वेश्चन नंबर 252 देखना है। क्वेश्चन नंबर अर्लियर क्वेश्चन के लिए आपको क्वेश्चन नंबर 216 देखना है। 216, 252।
ठीक।
ओके, और क्वेश्चन नंबर 45 है वो, इसके अंदर आपको तो जवाब आप ऐसे ही दे सकते हो। किसको आप एम्प्लॉय नहीं मानोगे?
Answer is E, sir.
E. Okay.
D.
Compulsory retirement, dismissed, resigned employee are not treated. As per compensation policy, in case of failure ATM transactions, मेरे ख्याल से इसको कोई जरूरत ही नहीं है। ये तो T+5 days, that is 5 days. Okay, no 5 banking days. Internal rate of return arrived at a point when where the future cash flows on net present value basis should be. कितना होना चाहिए?
Zero.
More than one.
Zero. Then only it is internal rate of return. Okay. Union Bank Social Foundation is registered under. It is Indian trust. It is a trust. It is a trust. Indian trust. Gold loan can be given for the purpose.
Any purpose.
ओहो, सोना खरीदने के लिए गोल्ड लोन दोगे?
Both A and C.
सोना खरीदने के लिए भी नहीं दोगे, प्रॉपर्टी में इन्वेस्ट करने के लिए नहीं दोगे. Agriculture and consumption, only A and C are correct. Check truncation system falls under which section of NI Act? Section 131. Extraordinary delay. Delay exceeding 90 days interest will be paid at which rate?
1% above applicable rate.
2%.
2.5% or 2% above applicable rate. Okay. Legal entity identifier is applicable for. All payment transactions of value rupees.
50
value
crore.
rupees.
10 crore and above.
10 crore and above. Okay.
50 crore है ना sir?
Sorry.
10 crores. 10 crores.
10 crore and above.
50 crore sir. 50 crore.
50 crore और 10 crore. 10 crore and above मेरे ख्याल से एक्सपोजर है. 50 crore and above का ट्रांजैक्शन है. ओके.
सर 5 करोड़ का एक्सपोजर है.
5 crore है क्रेडिट एक्सपोजर.
5 crore का एक्सपोजर. 5 crore का एक्सपोजर and 50 crore का transaction. Okay. I think with this I am coming to an end. Thank you so much. Hope the session was useful. You spent more than 3 plus 2, 5 hours for 6 hours yesterday and today, and I think we have covered almost entire gamut of banking within these 6 hours, and hope that whatever best possible I could do for you. Thank you so much. Thank you so much, Mohanan sir. Thank you so much, Yadav Saab.
Thank you.
Thank you, participants.
Sir, faculty, I am very thankful.
Good luck to you all.
Thank you, sir.
Thank you, sir. Thank you very
Thank
much.
you so much.
Please don't go. Please don't move out. Please don't exit.
Thank you,
Members
sir.
are requested. Honorable members are requested
Thank
not
you,
to
sir.
exit.
Thank you.
All are requested to be stay online for another 10 minutes.
Sir, I'm sorry, sir. It is already 10:15. Mohanan sir, I'm sorry.
Thank you, Kulkarni sir. Very thrilling and enjoying session you gave today also. Yesterday also the session was very enlightening and thrilling. Today also you gave a really heart-touching session, and nobody was willing to go out from this. And daily we planned for 2 hours, and it is daily exceeding more than 2 hours. I welcome you all. I, Shyam Sundar Yadav, Deputy General Secretary, Union Bank Officers Association, Delhi, welcome you all and thank all the participants, all the staff from the IBS, faculty, and all the guests, our regional heads, our STC Gurgaon in charge, Sri Ajay Kumar sir, is also online, and many our regional heads and deputy regional heads might have come in and might have gone out because of their some busy schedules. We are here with our General Secretary of Delhi, Sri Bhushan sir, also on the platform. He will be also given some time to shower his best wishes to all the participants. I thank the IBS Chairman, Director Sri Satish Kumar sir, Academic Director Sri Mohan sir, and all the technical teams of the IBS who have given this technical support from the background, especially Sarth sir and all other, I don't know the name. So I have very warm thanks. I, on behalf of Union Bank Officers Association Delhi, thanks all the participants who have given their precious time even after working hours. They have devoted 3 hours dedicatedly. So I thank very much. Before I invite our General Secretary, I think our STC Gurgaon in charge, Sri Ajay Kumar sir, is online. If he's online, sir, please say a few words before I should give this mic to our General Secretary and Mohan sir of IBS. Sri Ajay Kumar sir. Sri Ajay sir, STC in charge, Gurgaon. Sri Ajay sir, AGM, STC in charge, Gurgaon. Okay. I would like to invite Sri Bhushan sir. जनरल सेक्रेटरी यूनियन बैंक ऑफिसर एसोसिएशन, जिन्होंने मुझमें एक विश्वास जगाया कि मैं इस पूरे प्रोग्राम का कोऑर्डिनेटर बनूं यूनियन बैंक ऑफिसर एसोसिएशन दिल्ली की तरफ से। मैं धन्यवाद देता हूं अपने जनरल सेक्रेटरी साहब का, इन्होंने ये पूरा कार्यक्रम करवाने में मेरी मदद की। श्री ब्रिजभूषण सर।
हेलो
सर, वेलकम।
हेलो, आवाज आ रही है?
हाँ सर।
अच्छा, धन्यवाद यादव जी।
वीडियो ऑन कर लीजिए सर एक बार।
हेलो
सर, वीडियो अपना ऑन कर लीजिए।
धन्यवाद यादव जी।
सर
आ रही आवाज?
हाँ सर, आवाज आ रही, वीडियो अपना ऑन कर लीजिए, स्क्रीन पे हाँ स्क्रीन पे लीजिए टेक्निकल टीम।
किया ना सर?
हाँ राइट सर।
आ रहा है ना?
हाँ सर, यस।
First of all, I congratulate to Mr. Yadav, the coordinator of our Union Bank Officer Association Delhi unit, and I welcome to all the participants. 2 दिन का हमारा प्रोग्राम 3-3 घंटे बैठ करके सीखना अपने आप में मायने रखता है। और प्रदीप कुलकर्णी साहब, जिनको मैं गुरु का दर्जा देता हूं, मैं भी उनसे 2 बार ट्रेनिंग ले चुका हूं। एक बार इंडक्शन कोर्स फॉर फॉरेक्स ऑफिसर्स और एक ट्रेड फाइनेंस, दोनों प्रोग्राम मैंने स्टाफ कॉलेज बेंगलोर पे लिए थे। और मैं कुलकर्णी साहब से शिक्षा लेकर के आज ओवरसीज ब्रांच दिल्ली में कार्यरत हूं। आईबीएस की टीम सतीश जी और मोहन जी, मैं आप सबको भी बधाई देना चाहूंगा सर इस मौके पर कि आपने अपना बहुमूल्य समय हमारे सभी सहभागी साथियों को दिया है। और आने वाले इस 22 तारीख के जो एग्जाम होने जा रहा है, उसमें हमारे सभी साथी पूर्ण रूप से अपना सब कुछ दे करके और आपके सिखाए हुए तमाम जो हमारे बैंकिंग से रिलेटेड क्वेश्चनर्स हैं या आपने जो तैयारियां कराई हैं, उसको सफल तरीके से एग्जाम में तैयारी के साथ जाएंगे। और मैं समझता हूं कि आने वाले समय में एक बहुत अच्छा रिजल्ट आप सबको देखने को मिलेगा। मैं विशेष रूप से धन्यवाद का पात्र श्री यादव जी को देना चाहूंगा कि उन्होंने इसका इनिशिएशन लिया और इस प्रोग्राम को 2 दिन का प्रोग्राम ऑर्गेनाइज कराने में अपनी अहम भूमिका निभाई है। हमने एक छोटा सा प्रयास किया है, कितने सक्सेस होते हैं कितने नहीं ये रिजल्ट बताएगा, लेकिन हमारी तरफ से प्रयास होते रहेंगे क्योंकि हम एक वेलफेयर का काम करते हैं, अपने मेंबर्स के लिए रात दिन काम करते हैं, लगे रहते हैं। और जो भी हम अपनी तरफ से दे सकते हैं उतना कोशिश करते हैं। क्योंकि आज के इस कोविड के दौरान हम वर्चुअल मीटिंग के माध्यम से ही ये हम शिक्षा ले पा रहे हैं अपने सभी सीनियर्स से, अपने फैकल्टीज से। हमारे इस प्रोग्राम में हमारे एग्जीक्यूटिव्स भी जुड़े हुए हैं, मैं उनका भी आभार व्यक्त करता हूं कि उन्होंने अपना पूरा बहुमूल्य समय इसमें दिया है और इसमें ऑब्जर्व किया है, लोगों को ऑब्जर्व किया है, हमारे सभी साथियों को। और जो हमारे साथी इसमें अब नेक्स्ट प्रमोशन प्रोसेस के लिए नेक्स्ट स्केल में जाने के लिए तैयार बैठे हुए हैं, मैं उन सबको बधाई देना चाहूंगा, शुभकामनाएं देना चाहूंगा कि वो अपने इस मिशन में कामयाब होंगे और इस बैंक के ऊपर बैंक की सारी जिम्मेदारियों को अपने कंधों पर लेने के लिए तैयार रहेंगे, तत्पर रहेंगे। और मैं उन्हें शुभकामनाएं देता हूं और बधाई देता हूं। एट ऑफ सक्सेस हो, सफल हो आपने, बगैर किसी उसके कि मतलब लोगों को शिक्षा देनी है। थैंक यू वेरी मच।
थैंक यू ब्रिजभूषण सर, थैंक यू सो मच। अब मैं इनवाइट करना चाहूंगा हमारे एसटीसी के इंचार्ज श्री अजय कुमार सर, बेंगलोर एसटीसी गुड़गांव के हमारे इंचार्ज, जिन्होंने हमें बहुत ही सहायता की है हर एजुकेशनल टूर पे। थैंक यू सर, वेलकम।
Thank you, Sam Sundar ji, Brij ji. Thank you for inviting me, giving me a chance to say all the best to all the participants. Really a very good gesture from Officer Association that this time for all the participants, a training program has been conducted. Even if it's a short duration, but it was very fruitful. I was conducted yesterday and today also. Friends, from STC, we have also conducted a full day training program on this Sunday only. And today also a retail credit program was conducted by the STC. And again, our association has given a very good gesture to all of you that this very fruitful training program has been organized by them. And I am very much sure about this, that all the participants will be going to clear the written examination from whichever their scale they are going to appear for, either for 2, 3, 4 or 5. Really very wonderful training program was organized, and I thank you and I wish all the best to all of you. Day after tomorrow is the big day for all of us. And I hope that with the help of this training program, you must succeed in your interview. I wish all the best to all of you. Thank you, Sundar Sarji, for inviting me. Thank you.
Thank you so much, sir. Thank you so much for your kind words. You showered your blessings to all the participants, for all the examination aspirants for promotion. Thank you so much, sir. I would like to say that on the stage, we were with our regional head, Sri Sanjeev Kumar sir, also, who joined in between, and he might have left because of his busy commitment at his house. And the Deputy Regional Head North, Sri Sushil Kumar ji and Sri Parsuram sir were also online for few half an hour at least. And Deputy Regional Head Sri Vipin Kumar sir was also online for few half an hour, I think. And Deputy Regional Head NCR Sri Ashwini Kumar sir was also on with us. So I thank all the executives who were showering their best wishes even from the background, and they have devoted their valuable time on our platform. I thanks all of them from the platform of Union Bank of Association Delhi. Now I will invite our academic director, Sri Mohanan sir, to shower his best wishes. But before that, I would like to say that this is the premium platform, first time interaction online for educational tour being made available with in the association with our IBS, a premier education institute serving the nations since last 10 years, spread pan India, and we are very happy to be associated with them. And I thank Satish Kumar sir and Mohan sir for giving so much assistance to us in completing all this platform. And before that, I would like to say that the Union Bank Officer Association is an institute which is associated with the All India Union Bank Officer Federation, headed by our General Secretary Bala Chandran sir, our President Sri Girdhar Gopal sir, our Chairman Sri Satyanarayan sir, and youth leader Sri Indu Srinath sir. And in that turn, we are all affiliated to IBOC, the mighty organization serving the nation pan India with more than 350,000 officers, including Union Bank and all other banks. We are serving the banking fraternity to provide 360-degree services to all the officers in the banking industries since long, and we are the majority union, and we are the best union available in pan India for the welfare and 360-degree dedication to our officers. From Union Bank Association Delhi, I will again thank my President Sri Anil Sharma sir, my working President Sri Rajiv Bogi sir, and my General Secretary Sri Brij Bhushan sir. Thank you so much. Sri Mohan sir, it's your turn, sir.
Thank you, Shyam Sundar ji. Good evening, all the office bearers of the association, Union Bank Officers Union, and good evening, our beloved faculty Pradeep Kulkarni sir, and our beloved aspirants for this 3 to 4 and 4 to 5 examination aspirants from Union Bank of India. So 2 days we had a wonderful time, and really hats off to Pradeep Kulkarni sir, who covered most of the areas. It was just like it was scintillating his innings played in a 2020 match, hitting a century. Just like that, it was showering each and every second important points. I was watching for some time. So definitely this would have been helped the candidates to catch up. And for your information, yesterday's class has been already been uploaded in the YouTube, and today's class also will be uploaded tomorrow in the YouTube. You can watch it again according to your convenience before the examination, and which will help definitely, because most of the areas have been covered by Kulkarni sir. I once again thank all the office bearers of the association for union for arranging this program, and we are happy to be part of that. So best wishes to all the candidates. Be confident, attend the examination very confidently, and come out successful. Thank you. Thank you all.
Thank you, sir. Great. Thanks to Kulkarni sir.
Thank you, sir. Thank you. Thanks a lot, sir.
Super duper faculty. Excellent session. Really heartfelt session. We are really enjoying the full session, full 2 days, sir. And we will look forward for sessions in future too. Such an energetic session I have never seen. I was very thrilled, sir, with your knowledge, deep knowledge, and the way you are delivering your speech and the knowledge thoroughly. Thank you so much, sir. Thank you all. Thank you all participants. We wish all a very happy, very best exams. And we want to see you coming out with flying colors. We want to see you get promoted soon in examinations, after the examinations and after the interview sessions too. Thank you so much. Thank you. Good night.
Thank you, Delhi unit.
Thank you, Kulkarni sir. Thank you.
All the best.
Thank you all. Thank you.
Good night. All the best to all. All the best.
Okay, bye, sir.
Bye,
Thank you. Shyam Sundar ji, time back.
Right, sir. Good night, sir. Thank you so much to you. Thank you, IBS. And
Good
we are
night,
very
sir.
delighted to be part of IBS, sir.
Good night, sir.
Good night. Good night.
Okay, sir. Bye.
Good night, sir. Good night.
Thank you.
If you like our content, do like, share and subscribe.